Good afternoon, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to Market Profile Basic session. And this is one of the sessions where we are going to look into how to combine market profile with order flow, right? So first we'll get through the basics of market profile, and then we'll talk about which level to monitor, how to take reference levels from market profile, what are the key areas on how to monitor on day-to-day basis, and that's what we're going to talk about in today's session. And why market profile, why exactly market profile with order flow, why market profile suits with order flow. So market profile is also a visualization tool just like order flow, whereas order flow visualizes the flow of market orders, whereas market profile is also a visualization tool to understand what the participants are really doing in the markets. It records the market activity in the form of price distribution, right? Many people watches the price or price based indicators, whereas what market profile does is it records price distribution in the form of market profile. It also records volume distribution also in the form of a volume profile, and represents more meaningful information about traders behavior. It gives a tiny piece of information about what the intraday trader is doing, what the short term trader is doing, or where they are coming in exactly, trading those locations. That what market profile talks about. If you look into other tools, like most of the tools like RSI or MACD, they will be talking about bullish or bearish, or those tools will be talking about overbought or oversold. So those tools will be talking about support or resistance, right? Whereas the market profile is the only tool, to my knowledge, market profile and order flow are these are the two tools which talks about what is happening in the market, what the participants are doing, what where they are initiating their trades, and from the way they behave, one will be able to say that whether they are weaker hands, or whether even the market is topping out or not, or even whether their stop loss is get where they are placing their stop loss, or how the activity is happening. It shows you in a visual way, right? Whereas the other tools, like mostly trend line tools, you can only assume that when the trend line is going to break, you can only assume, oh, probably this is broken by bigger players or smaller players. But market profile and order flow gives you a real market understanding about what is happening in the markets. It usually a tool used by intraday traders and short-term players effectively to understand what market as a crowd is doing, right? So before getting into the session, let's look into this flow trader phenomena, where everyone are showing their palms out, and some people are showing palms in towards their face. They are typically using hand signals to buy or sell futures and option positions. If they are showing their palm out, that is a sell, and if they are facing their palm towards their face and they are showing they're waving their hands, then it means buy. So this is an old practice which is done in CBOT and CME, Chicago Mercantile Exchange, and then later it got widely spreaded among the worldwide exchanges. Right, so this is practiced before pre-electronic markets, where flow traders, they call it as a flow trader or a pit trader. They physically go to the exchange and they trade at there. So there you'll be typically finding in players, big players, small players. Everyone will be trading around there, and everyone have a understanding about what is really happening at the on the floor, who whether big buyer is buying or big seller is buying, right? Even those days it was very difficult, even despite knowing that the big players are playing, it will be relatively tough for the short term players to cope up with them, because when they are coming and rolling, initially they go against the short term players. To narrate an example, always on the floor there will be one blue jacket guy who will be wearing a very costlier jacket, and most of the time he will not be doing anything, and most of the time he'll be listening to the noise which is generated from the floor, right? If more and more noise is getting generated, then on the floor it usually means the short term players are buying something or selling something in the market. But when more and more noise is generated on the floor, that means more short term players are active. That's what one can understand from there. Let's say when yesterday high is gonna broken, when the price is going to break yesterday high, when the blue jacket guy he is hearing a lot of noise, That means more short-term buyers are coming above the day high, right? And more noise generating means more and more people are participating. That's what it means on the floor. But let's say when the yesterday high has been broken, initially it got generated more noise, but then all of a sudden the noise is getting dropped. The floor is completely silent. What does that mean? What does that mean? Can anybody say what does that mean? Yesterday high has been taken out. Initially there was some noise, but as the price going up, the noise reduces. The noise reduces, that means the participation amount of level got completely reduced, right? And thereby what one can see here is that, yeah, kind of an exhaustion of buyers. What you can say is that is an exhaustion of buyers, means the higher price is not attracting any volumes. There is no interest from the participants on above yesterday's high, right? Those days it is more of a sound based edge, where those the blue jacket guy has, especially the big players, they have more of a sound based edge. And these days those sound based edge have been completely moved out. Once the market moved from floor trading to electronic trading or the computer based trading, we really not able to see whether Goldman Sachs is buying, or any big player is, or any big broker is buying or not. We really don't have any idea. Like these days, it's more of a visual edge, where you can find many players play at very. They have a reference level. They are very much obsessed with those reference level. Usually, most of the players are breakout players in the markets. So they will be playing the previous swing high, or they will be playing the previous swing low, or mostly they'll be waiting for 4-day to be taken out, 4-day high to be taken out, or 5-day high to be taken out, and then they come and play the breakout trades. So if you want to really measure in terms of percentage, most of the breakout trades are failure trade, because it's a pure trend following. Probably it's going to fail 60 to 70% of the time. Those breakouts are going to fail, right? And most of the time markets are likely to move in a consolidation. That's what market does. Market does consolidation movement 70 to 80% of the time. And that means your breakouts, most of the breakouts are going to be successful only 30 to 40% of the time. That is the reality in any kind of markets. Let it be gold, let it be crude, let it be crypto, let it be Nifty, Bank Nifty, let it be any kind of stocks, right? So let's go back and look into a typical auction behavior. Right? Market profile always talks about auction behavior, how the auction is happening in the markets, any kind of days, how the auction is happening. To narrate this example, let's say Sachin's bat is coming to the auction, and the auctioneer, he himself want to kickstart the auction, and he says Sachin's bat start with 10 lakhs. There are 100 people sitting in the room, and he's showing the Sachin's bat and saying that 10 lakhs. So all in a sudden, the people who are waiting for the auction to kickstart, it raises the eyebrows of every other player, and the every other participants are just thinking about what could be the value of the price. They might be thinking about the value of the price, how much the same bat, it's an MRF bat, how much I can get it from the outside. So probably the outside I might get around 5,000 or 6,000. I could be able to get this same bat. But wait, it's a Sachin bat anyways. Maybe should I have to bid around 10 lakhs or 11 lakhs? That's the thing which is running through everyone's mind. Right? Some people might be thinking like, oh, man, this is anyways, it's MRF bat. I can get it from outside for 5,000, 6,000. Anyways, I'm not going to participate in the auction. Some people will be in a dilemma. Should I really have to buy for 10 lakhs? Or should I have to bid for 9 lakhs or 11 lakhs? Some people might be thinking, maybe I might go to the auction. If even if the auction is continuing for 20 lakhs, I might be okay with that. So that's the thing which will be running in the people's mind. And all of a sudden, one guy will rise and he'll say like 11 lakhs. Now that garners everyone's attention on the room, including the auctioneer, because now price started moving up. When the price is picking up, now what happens is that now people who are thinking, now they will be slowly coming and participating in those auctions. Now more and more people start voluntarily coming and participating in the auction. Now the price moves from 11 lakhs to 11.5 lakhs, again 12 lakhs, 13 lakhs, 14 lakhs. As the price keeps moving up and up and up, you will start seeing more and more volume get generated. Means more and more people are showing interest in higher prices. right? At some point of time, what happens? The 15 lakhs become 20 lakhs and 25 lakhs. Now the interest slowly starts dropping point by point. Like so now at 25 lakhs, hardly some 100 people might be competing, and at 30 lakhs, hardly 20 people might be competing, and at 40 lakhs, hardly 5 people might be competing. At 50 lakhs, highly only one guy takes the bat home. The same behavior you can watch it from the market profile also, right? As the price moving up, you'll be seeing more volume getting generated, but when the price is reaching day high, you'll be finding that the volumes keeps dropping and dropping and dropping, right? That is how the day has, if you take any day's high or any day's low, the volume will be relatively less, and that's a typical auction behavior, right? So you go and measure any kind of day, the volume will be relatively low. And whereas the Sachin Bat example, what we talked about is a one-way auction where only buyers are driving the price up. Whereas when it comes to markets, right, the markets are driven by both buyers also on the seller side also. So when the buyers are driving the price up and up and up, they will drive the price up as long as the buyers exhaust. So no matter what, where your RSI is saying overbought, as long as the buyers are there, they keep driving the price up and up and up and up. And at the last moment, the buyers are willing to give up. As long as the buyers are not getting exhausted, the auction continues on the upper side. Right? The buying activity stops, and then seller takes control. Now seller started pushing the price down. They'll keep going down and down and down as long as the sellers are getting exhausted. At the day's low and day's high, as I said, you'll be going to get a low volume, and the price is going to spend very less time at the day's high, and at the day's low, probably middle of the day, more activity is likely to happen. So that is what we are going to visualize from the market profile charts, and that is going to reveal lot many behavior about the market participants, and that is going to give you a tremendous edge. But today we have only half an hour session, so I'm going to explain some of the basics. Otherwise, we talk about market profile for more than 30 days, right? So in this case, so why I use market profile? I'll be using market profile to record a participant's emotions, to record what kind of market confidence currently it is having. Is it a good, whether the buyers are showing good confidence or the sellers are showing good confidence, or the buyers are showing weak confidence, or the sellers are showing weak confidence, or there are no confidence from the participants at all. So to measure the confidence, we use market profile. There are no confidence indicator as such. Like the RSI will only tell overbought or oversold, or the Elliott wave will say like whether it's in wave 3 or wave 4. But none of the indicator talks about how confident the market is so far for the day, right? So if they are exhibiting so much confidence, that means we are dealing with the strong buyers for the day. Then if the market itself showing weaker buying confidence, then probably we are dealing with weaker hand buyers for the day. So accordingly, you can position yourself in the markets, right? And also by learning to interpret market confidence and learning to interpret the market profile structure, you'll be able to spot weak buyers and strong buyers, or typically weak players you'll be able to spot out. You'll be able to understand what the short-term community is trying to do, right? So are they adding more to their position? Sometimes the short-term players, they do what? They'll keep on adding to their position. Short-term players add to their longs. Again, short-term players, they add to their longs. More and more short-term players, they come in the market, they add to their long positions. And all of a sudden, what happens is that there will be unwinding happening in the markets. So we will call that as a trading inventory. Trading inventory is like some set of community of traders. Let it be a short-term trader or an intraday trader. They keep on adding to their positions, right? So once you're able to spot that this particular community of traders, they're adding long, they're adding long, and they're adding long. Now they are too much of they added too much of longs. They are short-term players or intraday players. They typically unwind their positions in a very short period. If you know that kind of behavior, you will be able to predict exactly when the market is going to show some liquidation, or probably you will be able to anticipate such kind of liquidation in the markets. Right? One such example is right now going on in the market, which I'm going to talk about shortly. And you'll also able to measure where the weaker hand players are keeping their stops. Most of the people, as I said, they keep their stops at today high, today low, previous day high, previous day low, previous week high, previous week low, multi-day high, multi-day low. So those are the common places most of the people place their stops. And some people will take stop loss as a day low, some filter, day high as some filter, or some last 10 bar candle and then some filter. So that is what most of the people does. And yes, some of the technical analysis players, they use stop loss in the form of ATRs, right? Or some in the form of trend lines, or in the form of 200-day moving average. So primarily, as a most of the short-term trader, they come into this category, right? So most of the time they have a very tight stop loss, and it is very much predictable where they're going to keep their stop loss. Nobody cares about where you are placing the stop loss. As a community, where most of the short-term players are going to keep a stop loss, that is what institutions are interested. Institutions are interested in not in one particular traders 5 lot stop loss or a 6 lot stop loss, but as a whole, let's say there are 100 traders in State Bank of India futures. Most likely they might be putting at a crowded place. Since there are 100 players, assume that each and everyone is playing 5 lots, so there will be a 500 lots of liquidity will be sitting at one place. That is what institutions are interested. They are interested in their entire 500 lots. So that is why when everyone is going to put at the same location, that is why you'll be finding absorption in investors. The institutions go and absorb all those liquidity which is sitting in the form of a stop losses, right? Those kinds of stop losses where the participant places such kind of stop loss, that you'll be able to predict from market profile. And again, like order flow, market profile is also a practice. It is a continuous practice. I've been practicing for last 5.5 years. I've been practicing right from 2013, 14 onwards, right? So, and actively from 14 onwards, I've been practicing each and every day. What I'll be watching is the Nifty and Bank Nifty charts. So I'll be able to say what kind of players are coming into the markets and what kind of behavior is going on. If it is intraday player, what reactions you can anticipate. If it is short-term players, what kind of reactions you can anticipate, where the market could go if short-term players are about to cover their positions, or if they are short-term players are going to add more to their positions. How much reversal one can anticipate, pinpoint one can able to say that. That is what it helps intraday players and the short-term player. Short-term player who is looking for some 4 days of holding period or 10 days of holding period, they get more benefit out of it. Even from an intraday player perspective, right? So I closely derived 35 trading strategies over a period of 5 years. Now we have a great amount of classifications of trading strategies, and we also have patterns to say whether the entire swing high has been secured or not. So there are some 15 to 16 varieties of patterns we have discovered in the last 5 years of period. Which will help people to understand that this is a place where the market has been topped out or the market has been bottomed out. With a greater confidence, one will be able to say that, right? So ideally, market profile is also talks about who is dominating, right? But many players use market profile as a stop loss. They use market profile as targets, supports, resistance. All these players are amateur players, right? So market profile is a deep subject. Only thing market profile cares about is what kind of traders behavior is going on. That is what the professional players they make out from market profile. Otherwise, there are many people teach us simple tricks like buy above this value area, sell below the certain level. Market profile is not like that. Market profile never gives any buy or sell signals. Market profile talks only about the traders behavior. On top of the traders behavior, one have to interpret and they have to figure out their own signals, right? So what I have is an rule book. My rule book, it has been modified 1,000 times to bring to a perfection. Now we are at a stage where we'll be able to deal with any kind of market situation, like a GPS, right? So you know what a GPS does. The GPS, you move to some 150 meters, it tells you to turn right, it tells you to turn left, and then it makes you to turn, go straight 1 kilometer, then again take a left turn. So it keeps you informed about those directions. What I have done is that we had designed a way to tackle any kind of market situation. Let's say I'm not trading for 3-4 days, and then all of a sudden I want to come and trade in the markets. Then one can use that kind of frameworks to go and tackle any kind of trading days. So one can able to trade in high volatile situations, low volatile situations. Even there are certain trades, if you got stuck, you'll be able to manage your trades with hedges, and then you'll be able to get into a profitable mode. So such kind of things, if you want to practice, like, so in that case, market profile will be really helpful to understand where to add to your positions, where to reduce your positions. But if you are really thinking about stop loss alone, market profile is not the only tool. There are 1,000 ways to figure out where to place a stop loss, right? So there are even in market profile we talk about structural level stop loss, right? But ideally, if you're looking for only for stop loss alone, market profile is not the right tool. If you are looking for where to enter alone, market profile is not the right tool. But if you really want to understand what is happening inside the market, what kind of players I'm competing with for the day, and what kind of emotions, how the participant as a whole they are feeling as an emotions, how their confidence level is there. And on top of this, as an intraday trader and short-term trader, they can take advantage of any kind of opportunity. By this is a practice. This is a practice. It will not come on 1 or 2 days. It's going to take a lot of time, probably a hell of a lot of time. For me, it almost took 3 years to get into one form and 4 or 5 years to get into a different level, right? But what you can do is that for me, it took almost 5 years of experience to come to this place. Now, maybe to you people, it could be 1 year or 1.5 years, because I almost done all my groundworks and coming up with a greater experience before talking about market profile, right? So ideally, the market profile looks like this. It's all about letters. Every half an hour, a letter gets generated, which is nothing but an equivalent of an half an hour candlestick charts. So means market start at 9:15 to 9:45. You will be seeing letter A will be keep moving up and down, up and down. And now letter B comes up. Once 9:45 is over, letter B comes up, and letter B will be running from 9:45 to 10:15. So every half an hour, a letter gets generated. Wherever the price is moving up and down, you'll be getting a letters over there. Ideally, these letters doesn't care about where it opened, where it closed. All it monitors is that the entire range where the price moved up and down, what was the high it made, what was the low it made. That's what it cares about. It generally doesn't care about where it opens, where it closes. Even though there are a couple of indications says that there are a couple of small triangle, if you could note, there are a couple of triangles over here, which says that that particular letter got opened at that particular price, right? So you'll be able to spot out, but we really don't care. What we care a lot about is how the price distribution is happening. If I compress everything towards the left, what you get is a composite profile or a market profile. This is what price-based profile, right? So that this we call it as a normal profile, and the split version we call it as a split profile. As an intraday trader, I watches both. I watch both the normal profile and as well as the split profile. And as a positional player, I don't care much about split profile. Yeah, a little bit I'll care about split profile, and more I'll be looking from a normal profile perspective. So what market profile helps you is that it helps you to understand a particular day, how the day is getting developed, first of all. So what do I mean by that? So look into this condition. One of the day, the letters here, this particular letter, the block of letter zones over here, are getting repeatedly touched multiple times. You see this letter A, B, C, almost 3 times the letter got traded. Letter H got traded again. Letter J again touched. Letter L again touched. Letter M again touched. Each and every letter we call it as a TPO. TPO means time, price, opportunity. Each and every block is called TPOs. And you can see that every other day, you'll be finding this kind of setups in the markets. As an intraday player, it gives me a lot of amount of edge, because you see that the letters ABC, it's getting formed. I know that one of the places where the price might be coming and touching again and again and again. Many times I can expect, whenever the price is deviating away from that, as an intraday trader, I'll be mostly looking for an opportunity to mean revert towards the downside. Or if the price is going down, I'll be looking towards an opportunity to fade towards those levels. right? This is one way where you can understand that. What you can understand from here is that you can see that at the tops, this is a day high and this is a day low. So every day only one profile gets generated. So its market profile is completely independent of time frame. And every day you'll be getting only one profile. What you can see from the profile is that if you go and analyze any kind of trading day, more time wise, more the letters are there. That means every half an hour once that particular letter is getting touched. How many times the letter got touched? 1, 2, 3, 4, 5, 6, 7, 8. Total 8 times that particular level is arrived. Whereas if you look at the edges, the top of the day, how many times it got traded? Only one time got traded. Only letter G got traded. And at the bottom also you can see only one time it got traded. Whereas if you look in the middle, here if you see how many TPOs got traded, 3 TPOs got traded, right? So again, look into the zones over here, HI and JK. How many TPOs got traded? 3 TPOs again got traded over here. So market profile gives time also into consideration for any given day. And it also talks about where maximum activity is happening, where less activity is happening. That is what as a beginner you'll be able to learn from market profile. And that again gives a lot of nuances, right? So a typical day starts like this. From 9:15 to 9:45, you're going to see the letter A. Wherever the letter A is moving up and down, it's going to print letter A. And from 9:45 to 10:15 onwards, wherever the price is going to keep moving up and down, letter B is going to generate during those zones. So it's wherever it's going to move, it's going to paint B. And all the letters are going to combinedly align towards the left-hand side. So as the time, you will be seeing that now letter ABC is getting generated over here. So ABC, that means somewhere near the point of control is about to getting built. And again, you can see over here, it's getting ABCD. ABCDE means more and more sideways activity is happening now. And the market is getting the formation of the bell curve distribution. Mostly, the end of the day, most of the time, you're going to end up in a typical bell curve shape distribution. We also call it as a normal distribution, right? And yeah, there are specific patterns in the profile also. There are some 6 to 7 varieties of patterns, which we want to talk about over here in today's session. And from there, we are going to derive what level I should watch, right? And even in this case here, now we can see that typically the point of control, we call this as a point of control where maximum amount of letters are getting traded, or a particular price level. We are putting the letters at each and every price level, but a particular price level is getting touched again and again repeatedly, right? So that level, it's again talks something about what kind of behavior which is going on. I'll be able to say that if the letters is more than 10 times a particular letter is getting generated, I can say that this particular day is dominated by the short-term trading community. The entire day is dominated by the short-term trading community. Right? Again, there are many specific places I'll be able to say. To explain this, I have to go to the profile and say that what is happening in the market profile, how the market profile looks like. So what I'm going to do now, let me open the market profile charts. Click on a plus. I'm going to pull up my symbol. So in my case, I created a symbol like this, Nifty February. And it can be any time frame, it doesn't matter, but typically it is recommended to put an 30-minute charts, right? So ideally, it doesn't matter whether you're using 5-minute charts or a 10-minute charts or 15-minute charts. It doesn't matter. Every day you will get only one profile. And first of all, I'll launch the charts. Okay, here's the typical 30-minute candlestick charts. Now I'm going to right click and I'll go to indicator, and I'll scroll a bit down, and I'll say market profile ultimate. And like in order flow, we have a brick size. Here we call it a TPO size. I'm going to maintain the same TPO size which I used in the order flow. So for Nifty, I use 20. For Bank Nifty also I use 20. But different people uses different combinations. Like, so some other people use 40. Some people use even 100 over there. Right? Ideally, it doesn't matter what TPO size you're going to use. Whatever the TPO size you're going to use, you're going to get the same distribution patterns. Right? And coming back, there are a couple of settings I'm going to do. I'm going to remove this volume. If I apply it, by default you'll be getting the settings. Anyways, I have a couple of more settings. So you'll be getting the market profile charts as a brick format, and you'll be also getting a lot of automated reference lines in Bell Market Profile Ultimate. And each and every level talks a lot of trading opportunities over there, which I'm going to cover one by one. And I'll scroll down. Typically, I prefer I prefer some of the automated reference levels to be right. So I don't want a gap alert because I can see visually the gaps. I don't want weekly high, weekly low levels. I'm just going to disable it. So some of the levels will go away, and I just want to have a background color to be get changed. I prefer always using active background color, and typically go back. And always you can save it as a template so that you don't need to you need not to be apply every time. But for the first time, I'm just showing you what kind of settings I do and why. And the volume profile color I will be prefer to use instead of goldenrod. I'll be preferring to use the blue one. So I like this kind of setup because it is easy to focus on the reference levels. And let's say I'll go to template. I'll save as. I'll give a name. Let's say Bell TPO Nifty Futures template. So this template is exclusively for Nifty Futures. So next time I'm going to open Nifty Futures, I'll straight away apply this. I don't need to do all these settings every time. So I write next time I'm opening it, I'll go to template and I'll try to load it. And from the list, I'll be selecting over here the template which I created, Bell TPO Nifty Futures, and then I'll load it simply, as simple as that. Right. So now look into the Friday's activity. Friday's activity talks a lot about the market participants. So what was happened on Friday? On Friday, price opens here. Wherever the letter O is where the price opens, you can see the two variations of the profile. One is for any day, you will be getting a normal profile also, for a split profile also. The split profile will be running only for the current trading day, right? So on Monday, the current split profile erases, and then automatically it starts plotting the split profile only for the Monday trading. And you see where the letters are moving. The letter A. In fact, the price open was here. Price open here. You might see a letter O over there. Same goes in the composite profile also. So the normal profile also shows the same thing. Split profile also shows the same thing. The letter A, wherever it keeps moving up and down, you'll be able to see letter A got printed. The only difference is that if I compress my charts, so I can compress my charts by pinching and zooming in or zooming out the vertical scale, and I can also compress my horizontal scale also to see more profiles, right? So when I am compressing the charts here, it turns to bricks. When I expand to the chart, it turns to the letters, right? Ideally, if you look pretty deeper into that level, so that particular day, I can even split the profile here, and I can even compress any normal profile day. Now look closer at the day low. Day low, something interesting is happening over here. Letter A and letter B are exactly the same thing. And even each and every letter we set as a 20 TPO size, that means 1 pointer. Each and every letter movement is 1 point movement in Nifty Futures. So that means at 1 point level, initially the price was making an day low, price going up, again coming to the letter B, and it's going up. So the letter A and letter B are sharing the common level. Somebody is coming and initiating the buy exactly at the day's low. So initially it was making a day low, price going up, trying to do something, and again coming to the day low, and somebody is initiating the trade exactly at the same level of the day's low. Maybe probably you call it as a double distribution, double bottom levels. But if, did you ever cared about who is really coming and initiating over there? Who is coming exactly at the day's low and initiating the trades over there? What kind of players they could be? Did you ever thought about that? Right. So if you thought about that, you know that it is not, definitely not investors. They don't play like that. Somebody is watching the day's low. So who is the one who watches the day low? Investors, do they care? Let's say if I want to buy Reliance, do you wait for the day low to come and exactly do you punch orders at the day low, or you exactly punch order for a day low and then you will be carry forwarding for next 5 years, right? So investors, they used to carry forward for years, or even some of the short-term investors, they carry forward for months, 3 months, 5 months, 6 months, right? Only traders are the one who watches such kind of levels, especially the intraday traders, or especially some of the positional traders who want to hold the position for 3 days or 5 days. Typically, anything more than a day, we call them as a positional trader. So those are the players who wait, or sometimes it could be algos. Algos are not. Algos are what, one form of short-term players. Algos also, they wait exactly to that market price and then they come and buy at the same level. Algos, it could be algos, it could be intraday players, it could be short-term players. Ideally, we classify them as a trading money. Trading money is coming and buying there, and most of the times, market have a tendency to move against those weaker hands. Right? So this is one of the AB Power law, which is most likely to get clear probably in couple of days. So we don't know what is that couple of days. It could be 3 days, or it could be even tomorrow. But definitely price will come down to 10,772 in a very short term. When I say very short term, anything between somewhere around 3 days to 10 days is what I mean. Right? So mostly because this is not trading, institutional money is not initiating trade over there. Some trading money is initiating over there. Most of the time, it is going to be a weaker hand. So that's why it draws an automatic reference saying that it is a AB Power lows. Right now, that kind of levels we can always, this kind of mechanical levels is what I'm talking about, a visual edge. To understand this mechanical level, again, you go back and see one of the day here. So this day is called as a prominent point of control because it is having more than 10 letters which is getting traded at that level on 12th of February. Look into the 12th of February. If I'm going to split everything here. Look a little bit closer. I can split also. You can see every half an hour ones letter A, B, C, D, E, F, G, H, I, J, K, L. How many letters? 5, 6, 7, 8, 9, 10, 11. 11 times a particular level has been arrived every other half an hour once on 12th of February. So that is one of the interesting level. We call that as a prominent point of control. Automatically, the software plots a line saying that it is a prominent point of control. That means short-term players are playing that kind of market. This particular day is completely dominated by whom? Completely by the short-term trading community. Price went down on that day, so we say that this particular day is dominated by the short-term sellers. Short-term sellers moved the price down. But look into the next day's behavior. Look into the next day's behavior. On 13th, let me compress everything again. Let me move back. Let me. So here, watch out the 13th February high. 13th February high is, it just went exactly to that point of control and then selling it down. Again, it is a sign that this market is also the one who somebody is waiting exactly to come initiate a short over there. Market is touching, it's not even 2 points higher or 5 points higher, or exactly it went to that level. Wherever you're seeing that kind of exactness, those kind of level of exactness are dominated by short-term players. One of the example yesterday we had seen what? in the order flow charts, 11,000 levels has been continuously defended. Every time price comes to the 11,000 levels on the budget day, the RBI announcement day, 11,100 levels, players are coming and buying at every 11,100 point touch. So those are the places where you can say that those are most likely dominated by the trading money. Again, this is one of the places where trading money is coming and playing. That is why I'm saying that this 10,905 also, price having a higher possibilities of revisiting back. Right? So how it does revisit. So for example, I can show you previously. I have to do a couple of settings here to show that. So instead of one of the setting I would like to show you is the AB poor low. I'm just going to increase it to 50 days. So 50 days, if there is any pending AB poor lows are there for the last 50 days, just draw a line. That's what I'm just giving the instruction to the software, and it draws a line for me. So this is why each and every day we get a profile. Right? Some days it is elongated profile, some days it's a bulged profile. Right? So those bulged profiles are nothing but kind of a sideways market. But really looking into this information, look into this information here. 5th of February. 5th of February. What are you able to see here? This is 5th of February, right? This is 5th of February. What you're seeing here is an similar AB poor low. Similar AB poor low. Is it AB poor low? The letter A and B are having exactly same lows. It can be exactly same lows, or exactly the A and B lows are just 1 point difference or a 2 point difference. We call that as an AB poor low. In such a case, what could happen is that price could temporarily go up. Price could what? Price could temporarily, it shoots up, but eventually they come back and clear those references, because that is how price moves against those weaker hands. So it is mostly initiated by the weaker hands. Maybe from an intraday perspective, they may be right, but from a positional perspective, price always tend to move against those players. Price always tend to move against those players. There is an AB poor low, and in a very short term, we don't know what is a short term can be anywhere between 3 to 10 days. So in a very short term, one can anticipate that price to go and revisit those levels. Right, so that's one of our primary targets. Whenever you're seeing that AB poor low and price is moving 100 points, 150 points away from them, you get one of the finest opportunity to trade against all those weaker hand players. You getting my point? I'm not talking about entry or exit. I'm talking about the trader's behavior here. I'm talking about that you'll be able to spot a weaker hand trader's behavior. You know that price has the higher odds of coming and clearing. If you ask me what is the percentage of coming and revisiting back when it comes to index, it could be at least more than 90%. The way the price is coming and revisiting back, because we have seen this enough number of times in the last 5 years. Every time we see this information, despite all the bullishness, you'll be seeing a lot of bullishness there, and despite that, market come and revisit back. So the beauty is that there is last week, we not only have only one poor low, but we have one more poor low over here. You see, look at this example here, 31st January. That is where the February series started. So look into the lows of February. This is a slightly different variation of AB poor low, where the difference between letter A and letter B are just only 2 letters. Right? So the difference between letter A is around 10,710, and letter B low is, the difference is only 2 points between the letter A and letter B. But still, we consider that as a place where short-term players initiate their trade. So that means in a very short term, we can anticipate price to come down to 10,700 level. In a short term, they might win. I mean, from an intraday perspective, they might win. But positionally, those level have the higher odds of coming and revisiting back. And it took almost 12 trading sessions, 12 or 11 trading sessions to come back and clear those levels. So that is why we call that this particular level, we call it as a short-term reference level. We will carry forward this information as long as the levels are not touched. One such level is what we are currently talking about, It's the point of control level. So this, all these levels are very visual observations, which you may not have given a higher preference to when you're watching a candlestick charts or a bar chart. You might not given a preference to it, but nobody really cares about these kinds of levels. No, none of the short-term players, they care about these kinds of levels. Even most of the players, they don't have any idea what these levels are all about. So, but as a trader, you'll be able to anticipate what the other trader is doing in the markets and why they are doing that. Also you'll be able to reason and what could be the end effect of this action. So when I am seeing this information, when I saw this information, right, what I had done is that when the price went down, I 10,650, I started accumulating, and again I started accumulating at 10,600, and now at 10,800, when I seen last Friday there was an typical AB poor low formation, I just stepped out of my longs, and then I'm still willing to play towards the long, towards 10,900 900 levels. The level which I'm talking about, 10,900 levels, is this level I'm talking about. I'm still willing to play towards those levels, but I'm a bit of scared about this AB poor low. So I side out from my position. So tomorrow, if again this levels are keep holding in, I will try to initiate a long. Or maybe if there is a break again coming back to the level, I'll think about initiating again long again, right? So this has the higher odds of clearing in this series, and I mean I'll tell you why also. But let's go back to the session. I guess now you have a fair understanding about how players play visually. There are many places where I can keep on spotting such kind of visual reference levels. So sometimes what happens is that here, this is my previous day high. Price opens here. Price might open gap up and comes exactly to the previous day high, and then again pushing up. So when I see this kind of visual reference level, exactly price is coming and bouncing exactly from the previous day high, I know that only short-term players or intraday players play like that. So from an intraday perspective, we try to fade towards those levels, right? Most of my positions in the markets are towards those, towards trying to do a mean reversion trades against those weaker hands. Wherever I'm spotting such kind of weaker hand zones, I tend to fade. Some of my positions are intraday positions. Some of my positions are positional trades. So the level which I talked about, 10,900 levels, it is a short-term reference level. So I am attempting right from here. I'm attempting my shots right from this zone, this particular zone. So right from 15th February onwards, we've been in longs. We even in fact added to the longs when there was a break at 10,600 levels. So till then, I had a long play. I never initiated any shots. Now we feel like a little bit of breathing space, and then again we'll initiate one more long towards 10,900 levels. Right. So let's quickly go back to the basics, and let's discuss more. So this is how, if you compare a 30-minute profile with a market profile, it looks like this. Along with market profile, so this is a market profile. Along with that, you'll be having a volume profile also there, right? The volume profile is as similar to what you are having in order flow left-hand side. On the order flow left-hand side, you get the volume profile only for that particular day. So here in the volume, when it comes to market profile, you're going to get a volume profile for each and every day. Each and every day, you're going to have that kind of distribution. So here you can see it is in my case, it is a blue color one. I mean, the blue shaded one are the volume profile for the day. If you look closer, you could figure out a pattern over there. At the day high, always the volumes are thin, and day low is also primarily thin. Again, day high volume is thin. You can see more activity was happening around the middle or somewhere here in the form of distributions. Multiple distributions, you are able to see that. And there are days where it creates a distribution, and the distribution goes like a bell curve shape, right? And again, that reveals a lot more about participants, interested parties, where you can anticipate a support. So again, one of the day, you can see here, this particular day low, you could see that the letter B and C on 21st of February, the letter B and C shares the difference is only one letter. That means only one TPO difference is there. Or if there are no difference, we call that as a poor lows. So those lows are called as poor lows. Again, that is one form of where short-term players initiate the trades over here. So short-term players are playing the 21st February. Short-term players are playing the 22nd February also. So when more and more short-term players are present in the markets, that is what vulnerable to go and trade in line with them, right? So it's tough to take a view now. What I can understand here is that I'm dealing with short-term players for the last two or three trading sessions, and maybe it's getting tougher and tougher when you see more and more short-term players are coming here, because most of the time market move against those short-term players, right? And so the poor low, whatever the reference level you're seeing here, it's one form of an zone where you can anticipate short-term players are coming and playing over there. Well, let it be a prominent point of control. It is also one form of a short-term player. So what happened on 27th of February, 22nd of February, 20th of February, there was a prominent point of control. A prominent point of control is what? More than 10 TPOs, more than 10 letters if it is getting traded. If I count the number of letters at this zone, more than 10 letters would have been happened over here. So that means that particular day went up, but that particular day is dominated by the short-term community. The second day, again, it was a poor low. Again, short-term players are playing the game. Short-term players are playing the game. When you're seeing more and more short-term players playing the game, it is tough to go in the direction. It is okay to miss an opportunity. It's okay to miss a long-term opportunity. Another 100-point opportunity, it's okay to miss. So I side out of my longs. Maybe the activity, even if they want to go long, they will be doing something like this and they tend to go up, right? So some sort of crazy actions always happens before they are moving out. So one of the plays you can consider, if you are already in longs, you have to consider booking partial profits or booking some of your full profits, take away home and look for the next trading opportunity, right? So it is always one thing I learned. It's always market always tend to move against all those short-term players most of the time, right? So maybe at sometimes it may not favor immediately. It might take 3-4 days for the short-term players to get long to too long or short to too short. So what you are seeing here is that the short-term players are adding to the longs. They are adding to the longs on 20th of February. They added to their longs on 21st of February. They added to their longs on 22nd of February also. All are short-term players. If it is a good player this particular day, I would have seen some sort of tails. Here also I would have been seen some tails. Here I won't see this many number of distributions over here. Right, so that is how a good play will look like. Something different. The structure will be completely different. But the structures are saying me that I'm dealing with last 3 days. I'm dealing with more and more short-term trading community, which is something which I don't want to be in the direction of the trade. Right? Maybe it's okay. Maybe another 100 points goes up. I will try to find trade against all those players. Right. So as of now, what is developing here is that last 3 days, short-term players are coming and playing. Maybe tomorrow also there might be one more pattern where short-term players might go and play, and maybe they can go and take 10,900 or even 11,000. But when I am seeing more and more short-term players playing the game, that is where I go and trade against every other short-term players, because market always have the tendency to move against short-term players. These AB power lows always have the fair chance of revisiting back, right? And there are other certain levels where we can say that with a greater accuracy that these levels have the odds of clearing back. So I've been playing market profile from an intraday perspective also. I've been using market profile from a positional trading perspective also. Right, now coming back, we'll quickly go through that. So market profile, mostly it gets compared with normal distribution. Like a normal distribution, we have a plus or minus 1 standard deviation. Here also we have that plus or minus 1 standard deviation auction, which is nothing but here if you take the entire area, 68%, it comes to 68.2% of the time. The same way here it is represented in the form of bracket. That bracket is called value area, right? So value area is where 70% of the trading activity happens. 70% of the trading activity happens. By default, the software setting shows 70, but even if you want to increase to a 70 or 80, one can increase it software, but we prefer using the standard methodologies. The level here, the high of the level is called as value area high. The low of the level is called value area low. And in between, you can see where the maximum trading activity is happening. You'll be able to see a small block, small rectangular block. It automatically decides where the point of control. At times, it looks like the entire level is having the same level. So which price I have to decide. So it is completely software coded. The software decides which level to choose accordingly as per the way the market profile is supposed to calculate. So automatically it decides this is the point of control where the maximum activity happened in terms of number of times. So most of the time where you're seeing that more number of times price is getting traded, it also results in volume, more volume also. Right? So here also you can see, but lesser the time is spent, lesser the volume is. So you'll be able to correlate. And at the day high, low volume, and day low is also ultra low volume. That is the reason I say that when you are finding in the order flow, when there is a big order flow is coming at the extremely at the day low or at the day high, there will be a temporary reversal. Always the reversal will be temporary, but eventually that is a poor way of auctioning. A good auction will always have what? The day low or day high, you are going to see a typical ultra low volume. But if a day high is having high volume over here, then always temporarily market goes down, but eventually they will catch it back. Positionally, they will catch it back. So that's the basics of market profile, and it really works. It really works all the time. And the market profile terminologies, when it comes to market profile terminologies, the very 5 basic terminologies are going to be very important. Initial balance, which is nothing but the first 1 hour high and low, or in terms of market profile, letter A and letter B, high and low is what we are going to continue. That letter A is half an hour, letter B is another half an hour. So the initial balance is nothing but what? First half an hour, high and low. The point of control is what? The point of control is where the maximum activity is going to happen, and it is represented in the form of what? In the form of a block, where more activity is getting traded over here. You'll be able to see this block of information over here. You will be able to see this block of information over here. And the initial balance, as I said, you'll be going to see a stripe of lines. This type of lines is over here. You can see a vertical stripe, combinations of red and blue color line that shows the initial balance, which is nothing but the first 1 hour high and low range, right? And the value area is always the red color bracket, always the red color bracket over here. The top of the level is called as value area high, so people call this as VAH, and the low of the level is called as value area low or VAL. So the top of the lines is called as tails. So we call that as a tail. The top we'll be calling it as a buying tail. Sorry, the top is called as a selling tail. Where sellers take control. Price is going to the letter G. At that letter G, the day high, the sellers are stepping in. At the same time, the buyers are completely losing the control. The buyers are getting exhausted, and sellers take control of the market. They push the price down to the letter K, as long as the sellers are ceasing to exist. When the sellers are completely exhausted, you'll be finding a buying tail over there. So selling tail at the top. The tails are characterized by single prints. We call that as a single print. A single print is a zone where you have only one letter got traded at that price level. So you see that if you look into the price distribution, only one letter got generated. Only letter G is at the tail zones. So only letter G is at the tail zones. That's a selling tail. If you look into the buying tail, so last you can see the single print. We call this a single print because only one letter got traded over here. But if you look in the center, there are multiple letters got traded in this band. That is not a tail. This is here is also it is not a tail here because many letters got traded. A, H, I, J, K. If you look horizontally, multiple letters got getting traded. So we don't call that as a tail. A tail has a characteristic of single prints. So there are, if you look, only 3 TPOs at the letter K are having, so how many TPOs? 3 TPOs at letter K. We call that as a tail. Letter K. Those are single prints, means only one letter got traded over here, and we call it as a buying tail. So buying tail at the day low and day high, how many letters we have? 4 TPOs. So selling tails usually shall face 4 TPOs. Right, so those tails, if it is more than 3 TPO or 4 TPO, we call it as a good tail. Even if it is more than 2 TPOs, we call it as a good tail. If there are no such tails, then we call that as a poor high or a poor low, where you can find that those levels are dominated by the short-term players. Short-term players, they literally wait for the price to come to the day low and they initiate at that exactly at that same level, right? And I guess like how we have the TPO size settings for each and every symbol, here also I prefer using a template to get the optimal settings. I prefer to go as low as possible for a price per tick, whereas in the markets, many people use higher TPOs. For Nifty, some people use 3 TPO or some people use 5 TPOs. So ideally, when I'm going to change the TPO size, it really doesn't matter. Let's say the one which you're watching right now, it's using 1 TPO, means each and every letter 1 TPO is getting generated. Nothing is going to change if I'm going to change from TPO size from 1 to 3, right? So many people uses 3, and so some people uses ATR based settings. I don't prefer using ATR based settings. I'll try to go as low as possible. So let's say the TPO size, instead of 1 point, I'll say every 3 points once. So that means 60. I have to put 60 over here. 60 multiplied by 0.05. Every 3 point movement, a letter gets plotted. So you see that the distribution, nothing has been changed. The compress, I will be going to get the same levels. Everything is going to be the same. The structure is going to be the same. But since I am looking pretty closer to how the behavior of the participants, I'm talking about an behavior at every 1 point level in Nifty. So Nifty is 10,800 points. So I'm looking closer at every 1 point interval. If price is coming to that exactly to the same level, I term that as a short-term players, because at 1 point level, price is coming exactly to that same level. So last Friday, 10,770 was the low at A period, and B period is also exactly 10,770. So I'd say like this is how the short-term players play in the market. So in that case, I don't use higher TPO size, because that means a lot more data point to me. So that says that the short-term players are really in control. And of course, that data point is not getting smudged. It's still that data point is there. But many places it requires this kind of minor observations. So that is why it always good to keep the TPO size as low as possible. So these are my settings, which I am practicing right now for most of my scripts. But you are always free to choose any TPO size as per your comfortness. And when it comes to market participants, we look into scalpers or intraday. Most of the scalpers, they get in, get out, and the intraday players also, they get in, get out of a couple of minutes. The holding period is anywhere between a couple of minutes to a couple of hours. Whereas the scalpers, couple of seconds to a couple of minutes. Short-term traders, typically more than 1 day, and it can go up to 10 days also. Some people very rarely hold it for 20 days, 25 days, and very rarely the people who roll it for the next month, right? And intermediate traders, some of the traders, they roll over their positions for months. I've seen some of the players who rolled over Reliance for more than 4 years. Those comes in the category of long-term traders. Some of the intermediate traders, they will be rolling over their position for 3 months, 6 months. Yeah, some of them are institutions also, especially the FIs. They come and roll over their positions. Even the some of them, sometimes even they roll over the hedges also. Right? Even now, mutual funds are doing the same thing. They roll over the hedges for quite some time in the Nifty futures or in the call or put positions. They used to roll over their positions there. And typically, these kinds of traders category, out of this category, we are going to deal 80% of the time with the scalpers and short-term traders. 80% of the time. That is why we will be able to spot mechanically from market profile. And that is why we use market profile. We don't trade buy above the value area high, sell below the value area high, buy above the point of control or sell below the point of control. We try to understand who is responsible for the creation of the point of control, who is responsible for the AB poor law, why an AB poor law is getting generated. So if more and more you're going to find the short-term players, higher the odds that you can go and trade against them, and you can make some nice money by trading against them. Right? So a point of control is the fairest place. We say that it's a place where more business is getting conducted, or more people are willing to do the business for that at that place. If it is more than 10 TPO, we call it as a prominent point of control. And my software here, the Bell TPO software over here, it plots me wherever the point of control is there, it gets me an indication, right? So of course, it is plotting only for 5 TPO levels, but if I right click and I'll go to indicators, by default, it looks only for last 10 trading days. But I really have to extend to a couple of more days because more TPOs got generated even above that also. So prominent point of control, I'll say like last 40 days, wherever last 40 days or last 50 days, if you keep it and apply it. So wherever any levels, such kind of levels which is not touched, those levels will be showing it for you. So now we can see there are still 4 point of controls are getting created. More the point of control I'm going to see, more the odds are what kind of people I'm competing with, more and more short-term players. So short-term players initiated their trades here, short-term players initiated the 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 trades here. So I'm dealing with more and more short-term players for the month of February. That is how every time you go and trade against them, you will be fairly successful in your trades. And because you know that there is no serious money in the system. When you are not seeing any serious money in the system, you're going to compete more and more with intraday players and short-term players in the markets. Right? So probably the institutions are, maybe here and there they might be present, but they are not dominating. Who is dominating is mostly short-term players are dominating. So you can see, I'll go to the RBI announcement day. So here is the RBI announcement day. On that particular day, you can see that it's a prominent point of control. More than 10 TPOs, 10 letters got traded at that location, and price went down. So short-term sellers. Next day also, it's a prominent point of control. So it is a short-term sellers. And think about the next day also, it is a prominent point of control and price went down, short-term sellers. 12th of February also, prominent point of control, price went down, short-term sellers. 13th February also, price went down and it created a point of control. It's a short-term sellers. And think about 14th also, it's short-term sellers. Right? So I'm dealing with more and more short-term sellers. This is very interesting information to me. Right? At least from the RSI or Bollinger Band, I will not be able to understand what kind of people I'm competing with. I know that these guys are now getting short and short and short and short and short. And every time these players are getting into short, right? So as a short-term player, let's say I'm a short-term player, I typically hold the position for 1 or 2 days. I don't give a commitment. Today I'll go long, tomorrow I'll go short. That is the primary criteria of most of the short-term players. They today go long, probably they go long for 3 or 4 days, 5 days. When the price is hitting a certain range, that's why you see that price will be mostly consolidating. Those are the consolidation zones are mostly played by the short-term community. They might be going, they're pressing harder, they're pressing the price harder, lower and down and down and down, but they're not getting any serious elongation. Price was slowly dripping down. Yeah, every other day we are going down by some 30 points, 50 points, 80 points, 100 points. But overall, this action is very slow and steady. If you're observing in real time, if you're watching the charts in real time, you can feel that the price every day is balancing 10 times. Oh my God, it's such kind of an irritating markets. Right? That kind of feel you will be getting over there. So when you're seeing more and more players and more such kind of reference levels are there, your conviction on your trades, it increases, saying that you are dealing with more and more short-term players. Possibly now the short-term player who initiated the trade, now they might be sitting profit over here. Now at this level, they might be sitting at a greater profit. Or maybe think about the players who initiated the shorts over here. Right? So again, these guys also sitting up with a bunch of profits. But think about the places who are the short-term players who are initiating the trades are thinking that this market could crash. They are mostly the laggards. They are the one last to come and compete in the markets. Already some smart short-term player would have been entered here. Again, some smart short-term player would have been entered over here. Now, more and more people are chasing them. They are also short-term players. Now, again, more people are chasing them. They are dumb money players. They are most likely to come and get into the trap. Right? So, not every short-term players are smart money. Right? So, some short-term players who are starting the trend, they could be short money. But more and more short-term players are going to follow. They are most likely to be a dumb money. So, we know that this is a really dumb money. So we have all the odds of going and playing against them. That is the reason we are getting almost every day we are getting a prominent point of control. And one of the day here on 13th February, price goes exactly touches the prominent point of control and it is falling down. These kinds of information, we call that as an exponential information, where every other day participants are coming and shorting. These kinds of markets doesn't crash. Just like that, it doesn't crashes. Right? So mostly, the market always have the tendency to remove the weaker hand first, and then it moves against all those. Even if the market has to move down, what the market does is that it does a short covering activity. It mostly moves. It tries to move against most of the prominent point of control, thereby removing all those weaker hands. Then it tend to takes a direction on the downside. So market don't like the weaker hands most of the time, especially most of the times. I mean, when I say most of the time, it's every time it moves against those weaker hands. Okay, so getting back, we're talking about the point of control over here. We call it as the fairest point to conduct the business. Everyday market achieves, or we call it as an equilibrium point. Market achieves some sort of an equilibrium point. Every time market doesn't keeps on moving up and up and up. The letter A here, letter B here, and letter C here, and letter here, D here. This is how market doesn't move. Right? This kind of move happens very rarely. Hardly, this is less than 5% of the time. But 80% of the time or 90% of the time, market moves up and it comes down, and it comes down, it moves up, it moves up, again comes down. That is how an intraday player can take a lot of opportunity in these kinds of zones, to fade towards an up move. When you're seeing that more and more activity is happening at a place, all of a sudden you're seeing a break. Many people will emotionally go and take a trade over there. That is why. But if as most of the market profile players, they'll be expecting the price to come back to the same level, because that's one zone where point of control is building for the day. That is one zone point of control is getting built for the day. So every day the day starts, I'll be looking into where the point of control is building for the day, or where the value area is getting built for the day. Is it shifting higher or is it shifting lower? And compared to yesterday, where the value area is building today, is the value area is building higher or lower? Those are the observations we'll be keep on making in the markets. And moreover, we'll be studying the behavior of the point of control, where the primary point of control is getting formed. It usually acts like a magnet. It acts like a magnet, and typically that brings many trading opportunities as well parallelly. So I think it's time to take some couple of questions.
Hi, I have a question regarding the AB poor low.
Yeah.
Let's consider an example of a price action of say of 2 minutes. So at 1 minute the price goes down, the other minute price comes back.
Yeah.
So if this price action happens at say 9:29, so 9:29 to 9:30 it will go down. It will print A. At 9:30 to 9:31 it will print B.
Yes.
If the same price action happens at 9:28 instead of 9:29, we will have only A getting printed.
Yes.
So how do we differentiate these things? Because just because of 1 minute difference, we are getting AB poor low and we are getting a single print of A.
So we are plotting at every half an hour once, right?
Okay, let's call it half an hour instead of 15 minutes.
I mean, typically we use half an hour.
Then 9:45, yeah.
Even though it is a software control, you can change to, even if you want to print every 15 minutes a letter, you can go and print. So it's basically a software control over here. You can set the TPO size in terms of minutes, but that doesn't mean the 30-minute charts. Every half an hour letter once, the letter A got generated. Okay. So now your question is like the letter B, what if the difference between letter A and B is just 1 minute, right?
Correct. That's right. If the price action happens exactly at the boundary.
Let's say the price is going down around probably 9:44, and then it goes up, and then it creates one more letter and bouncing back.
Yeah, 9:45 it creates other line.
Yeah, it's possible. It's always possible. But if you want to check that, there is one easy way to do that. All you have to do is that you have to zoom even more little bit, and you'll be able to see specific arrows over here. So you're able to see an arrow over here. There is a small red arrow which shows that where the bar is getting opened. So here in this case it's opened over here, and for the letter B could be even more bit higher, I think. I'm not able to find the letter B. Maybe in the new version they would have removed. Okay, never mind. What I can do is I can go to the candlestick and I always find where is the high and lows. Just make it as Nifty 30-minute charts. So definitely it is not, right? So this is a half an hour and another half an hour low. So it is not. So it means if you are seeing such kind of candles, it could be looks like this. Like letter A candle would be looking like this. It closes at the lows, right? So and then when the letter B starts, letter B low is the open of the letter A period close, and it goes like this. This kind of candles you will be able to see that. But yeah, that doesn't happen on that day. It's a nice week. Price went up and then again come down, again goes up. So that you can clearly say from even if you use a 1 minute chart, you'll be able to see first 1 hour activity movement. So if you look at it from a 1 hour activity movement, what happened over there? Because we are watching it live last time on February 22nd. What's this? February 22nd or 20? Different chart. 50. This is an 1 minute time frame chart. So there was an selling. Let me remove this. The selling happens over here. Again went up. Again selling happens, and then price going up. Right. That difference is what you're talking about. That the letter A and B are pretty closer by.
Yeah. So if the down move stops a day and at 9:45 exactly, and up move starts at 9:45,
yeah,
then
it will be considered as an AB power low. Yeah. Still, will be considered as an AB power low.
Yeah, but if that same movement happens at 9:42, we will get only A printed.
Yes, only A printed.
Just because the price action happened few minutes, here and there, we are having one signal, but in other case, if it happens at 9:40, we will not get the signal.
No, there is no signal over here. I'm not talking about any signals.
No. Signal means AB poor low is the signal I'm talking about.
Those AB poor lows you will be getting only after end of the day.
Correct. So if the price action of down move and up move happens at 9:40, we will get only A printed. If it happens at 9:44, 9:45, 9:46, we will get B also.
No, above 9:45.
Yeah, that's what.
9:45, the letter A stops and the letter B start coming in. By that time, if you are getting a letter B exactly at the day's low and moving up, it is a sign that we are dealing with more and more with short-term players. It's a short-term players' behavior.
Sir, I have a question. Yes. So, if you put the TPO size 60, okay, on 19th February, I'm seeing I think poor low. But if you're putting a TPO size 20, it's not showing a poor low.
So that is why I'm using an optimal TPO size. So all these reference levels are coded as per my requirement.
Okay.
So when you want to trade my own requirement, then you have to go with the TPO size which is preferred by me. And so these are the optimal size which will help you to identify that exact minute difference between the lows. Every time the price is coming and approaching those kinds of lows. For example, for Nifty, this is for the Nifty zone. Currently, it is at 5,000 to 30,000 range. Even Bank Nifty also comes into this picture, where we are looking for a tick level of 1 point difference. So 1 point difference. So 1 point difference, if it is going to happen, then we'll say that reference level is dominated by the short-term players.
Okay.
If you are going to use 60, then that means the difference between letter A and B or some other two different letters could be having a 6 point difference or 3 point difference. So which I don't consider as I consider that as a good low. So probably as per me, it is not a poor low. As per me, we'll be looking to that exact minor one tick level to say that that particular day is dominated by the short-term players.
Okay, thank you.
Yeah.
Sir, what is the difference between AB poor low and poor low, sir? Nothing. Will there be any difference in it?
Yeah, the difference in terms of revisiting. A poor low, at times it get revisited, and many times it may not revisit at all. So we don't play the poor low as a reference. Poor low is the one indication that short-term player playing the game. But AB poor low has a very high significance of revisiting back in a very shorter period.
So poor low will not be taken. Only AB poor low will be taken as a reference.
Oh, as a trader, I don't trade poor lows.
Okay.
Many people tried poor lows initially in the beginning while you are playing market profile. You trade the poor lows, price comes and revisits in 1 or 2 days. That usually happens in a sideways market. In trending markets, poor lows may not get revisited for even for more than a month or 2 months or 3 months.
Okay.
Right. So, but AB poor low has a very higher odds of coming and clearing in a very, very short term. That is why we had differentiated poor lows and AB poor lows. If you look into the most of the textbook talks about poor lows, but AB poor low is one special poor low we give more consideration to it.
Okay, sir.
You may not find it in the textbooks. Yeah.
Right now in Nifty we have a lot of PBOC on the upside and AB poor lows on the downside. So which is more important?
Both are equally important because both the sides we are played by the short-term players.
Okay.
Typically, these kinds of things won't happen. This is the very first time we are seeing it. But yes, when always market shows you different information and with using market profile, you'll be able to see that what is happening is that these are short-term sellers and these are short-term buyers, and now we are somewhere in the middle between these two players. What I can say is that there could be a possible whipsaws, and then we are going to do that. Maybe I could be right, or we are going to do means this next complete series we are going to trade in this band only. That is how the position has been there. But when you are seeing multiple prominent point of control, 3 or 4 prominent point of control, which is coming on the upper side, the typical behavior will be like they tend to clear all those prominent point of control, but that is positionally still bearish. They will tend to fall down, especially when the price is coming down with multiple prominent point of control. Price is coming down. While it is coming down every other day, it leaves a point of control. It is not getting touched. Again, one more. Again, one more. Again, one more. Right. So at times, what happens? They tend to do a lot of sideways action, and then they try to clear all those prominent point of control. Once they clear it, again, the reaction is again on the downside. That's what we had seen many times. Every time we see that kind of setup, prominent price clears those prominent point of control. It try to remove the weaker hands. Once all the weaker hands are about to remove, then finally takes the market, takes the direction, mostly towards on the downside. So maybe after March or so, we can think about initiating an positional downtrends. But immediately, one have to get in, get out, and playing towards those reference levels. It's tough to say which side first they will hit. They may do like this also. They may let's say you already you're having an point of control, a poor low, an AB poor low. Let's say price goes up, it clears again. It creates one more weaker hand level. Again, it creates one more weaker hand level, and that way it completes all the reaction. Then in that case, you can trade the shorts, right? So we really adjust our position based upon what is happening in the markets. Like, let's say if the market is completely clearing this, our market is completely trying to remove part of the positions over here, and it comes back into the range, then I'll be thinking more about longs over here, right? So according to what is happening in the markets, we try to readjust. Some places, which is something like this, like these kinds of places, I'm having levels on the upper side also, I'm having the levels on the downside also. We tend to wait rather than getting confused ourselves, right? So we look for more clarity from the markets. Then once we get a clarity, we know that 10,900 levels definitely going to come. We also know that 10,750 levels are also going to come because we have a AB power low. But maybe once the AB power low is getting cleared, I'll be thinking about 10,000, initiating in 10,900. Or maybe once 10,900 has been cleared, our market might be doing something, I'll be position myself positionally towards the clearance of the AB power low. So either way, it's a game. I see this as a game. I see this as an intelligent game where you have to adjust yourself according to what is happening in the markets, according to what kind of information is getting generated in the markets. Sometime back, market gives you a clear-cut clues that all these are weaker hand shots, right? Which is most likely to get cleared in a very short term. And that is what market also had done so far. It is going up very slowly and steadily. And think how the market is going up against those players, right? So you see a lot of crowded activity, more crowded activity happening in the space, and now also more crowded activity is happening in the space. But it's a slow and steady move. The steady up move is also participated by the weaker hands. That is what it makes even more challenging in the markets. That complex the markets are, right? So in this case, if you want to really wait, your best opportunity towards long comes, especially when you are breaking this balance and we are getting back into the range. And that is where you can expect to go and trade towards other weaker hand levels. So when more and more weaker hands are playing, step away, don't trade in their direction, wait for your trading opportunity, right? So somewhere the market will show you the opportunity. If not on the downside, it will show you on the upper side. Somewhere the best opportunity market always throws. And the only thing is that we should be in the right position to capture at the right moment. And that comes as a practice. Sometimes we're going to miss. We might going to get stuck in the middle, and you have to hedge your position and you have to manage your position. But sometimes you're going to nail it at the damn high or at the damn low. Sometimes it could be an intraday position. Sometimes it could be a bigger positions, positional trades, right? So it is a practice. Well, but first you need to equip to see this kind of information. Once you equip to see this kind of information, then you can think how I can plan my trades, right? So as a trader, none of the trader who is using technical analysis, they really plan their trades. They only look for the conditions. They have a checklist, RSI overbought, stochastic oversold, prices at Bollinger Band, okay, go and buy. They don't think about how the other players are playing, right? So really this is one tool where most of the players think about how the other players are really playing in the markets. Accordingly, we can make use of those information.
Rajendran sir?
Yes.
Just one clarity. On Monday, I know you got a couple of references low on the lower side as well as a couple of weaker references on the upper side.
Yes.
Yeah. So will you be taking positions looking at the opening based on previous day range, or do you wait for until the IB formation, initial balance formation, and then take a position?
Nice question, right? So many times my trades are not at the open at all.
Okay.
Because most of your best opportunity will not, as an intraday trader, I'm talking from an intraday trading perspective. From an intraday trading perspective, most of your best opportunity will not be at the open. But if you look into the most of the traders' behavior, somehow they find a trade around 9 o'clock or 10 o'clock or 11 o'clock. Within that time, they want to enter because they want to exit before 3 o'clock. So none of the traders are willing to wait for the opportunity to come around 11 o'clock or 1 o'clock or 2:30. Sometimes the best opportunity may not come at all. Think about this particular day. I assume that you're coming and initiating a long because all the global markets are bullish, everything is bullish, and you are initiating a trade at the open. Anywhere, wherever you initiate a trade at the open, you got stuck in the middle. That's what it's going to happen most of the time. Very rarely you initiate a trade and then market moves in your favor. Those kinds of trending moves in the markets are very, very less. Most of the time, market used to balance, and most of the time as a trader, right? So think about this particular. Probably this is one interesting place to look for. So think about this example here. Assume that the people who already parked their money in the first at the opening itself or in the first 1 hour itself, right? So you see that more and more market is frustrating. It goes up, it gives a little excitement, but it drops. When it is dropping, it drops. All of a sudden, it drops fast. Until then, the market will be doing something slow and steady. You try to do that. It goes up and gives a little bit of excitement, and it comes down. Many people thinking like, who has the past memory? Who has the past memory that last 8 days, every time the market used to crash, oh my God, what could be, this could be one sort of crash. That kind of things will be running in their mind. and people try. It scares them to get out of their position, and especially the one who enters at the open, right? So if there are any opportunities there, most of the opportunities are coming in the late half an hour. If you really notice that particular day, the opportunity is not at the open. It's coming somewhere over here. The opportunity is coming somewhere over here where the drive was happening. These kinds of opportunity, if you want to catch most of your best opportunity, think about this particular day again. Yeah, at times price opens and then it keeps moving up, but most of the times, think about the zones over here who coming at the opening. If you are an intraday trader, yes, you would have been benefited. But if you are a positional trader, who is think about initiating the positional trades over here at the open, and the price moves against them down, it was also hitting 2-day low. I mean, multi-day low, where price was breaking. It was almost made 10,600 levels. People might panic and then they exit out of their game without knowing the context. So that's what I say. Like, even if you most of your opportunities will come mostly at the middle of the day. Sometimes it may not come at all. So you have to, rather than getting in, getting out in multiple trades, trying to think about it, try to focus on the quality of the trades.
Yeah. So basically, we need to wait for acceptance or rejection of the prices. Yeah.
Yes, some sort of acceptance or rejections are your trading opportunities. You have to wait for that. All in a sudden, you want to find some opportunity. Definitely, you'll find an opportunity. Let's say market opens gap down. I will always find an opportunity to go long. So that is our bias. That's mostly our bias. You're prepared for going long, and you always want to see what you want to see. But as a trader, I might have some reference levels. I would have been seeing this single print zone. You see, there is one single print zone over here in between the profile. So which we talked in the last Friday session also. So this is it acts like a kind of a support. Right, last Friday also price went below this level a little bit of down, and then it went up again, a little bit of down, and then it went up. Really short-term players bought that. Maybe one more round of test. What if they're going to do one more round of test, and again they're going to come back. So these are the places where I see rejection of those levels. We don't use this level as a support or resistance, but when the price is spending more time above that, right? So it is one of the confirmation that we are going to get some higher acceptance levels. So what are the potential targets? One of the potential target is 10,907. Why 10,907? Because that is one of the level which is initiated by the short-term players. So that is how we'll think, we prepare for the trade, and then we'll execute. Rather than, okay, price, we will be, at the morning, we will be having a preparation, how to prepare for the day. What if there is a gap down, what to do? What if there is a gap down and then price is going to go lower? Are you going to wait? Are you going to short? Or what you are going to do based upon what is the odd which is presented in front of your eyes? What if the price is going to open inside the range? How you are going to prepare? What if the price is going to open inside the range and it's going to drive up? How you are going to prepare for that? What are the weaker levels you spotted? Why the price has to move up or why the price has to move down? What are your odds that price is coming and clearing AB power low? What are the odds that price is going and clearing the point of control? You'll prepare scenarios. Probably all those things you can write it down as a plan, or probably initially it's good to write it as a plan. But over a period of time, you have to do all those things in your head. Right, so I do it in my head these days, but I also write about market profile levels in the Slack group. So I always know where the prominent point of control is, where the AB power low is, what kind of activity is happening. So typically we are seeing more and more weaker hand activity last couple of days. Initially on the sell side, now on the buy side also weaker hand activity is happening. So now, yeah.
Thank you, sir. Thank you.
Sir, can you briefly explain about this double mechanical reference failed auction?
Yeah, I'll talk about it.
Because I'm using basic Bell TP feature.
Okay. So the double mechanical reference is pretty simple. What it is, it's nothing but it is built on top of the tail zones. You see the tails on 15th of February and 18th of February. The tail is very lengthier. Longer the tail, we call it as an excess. Right, so it's the tails here, especially when the tails are having overlapping zones. So when I say overlapping zones, when I try to match the tails, these are the places the tails are getting matched. So those are the places where people keep their stop loss. People keep their stop loss where? Exactly at those lows. So think about this example on 19th of February. What happened? 19th of February, right? So price went to 2 TPOs down below that. That means still it is matching. It is having matching tails. It's still having matching tails here with these bands. So with these bands, there are a lot of matching tails, and price started going up. That means this particular zone is where most of the players used to keep their stop loss, right? So always when the price is coming and breaking that level, it breaks really fast. Most of the time, price coming and breaking, you'll be seeing a strong elongation coming in there because more people tend to keep their stop. That's why it's called as a double mechanical reference levels. There is no guarantee that it will come and break, but when it is coming and breaking, you'll be seeing a lot of weaker hand players getting out of the position. More liquidation, you can see old money will be getting out of the system. Stop loss is what? Old money, they're getting out, right? So weaker hand players used to keep a stops below those tails. They might be keeping at days low. That's why I said like they'll be keeping at days low, or they might be keeping at 2-day low. 2-day low. So this is a 2-day low zone. Somewhere here are some 2-day low filter, a 3-day low filter. That is where most of the players keep their stops here. When they find that the market was rallying, everyone was happy that market is rallying. Everyone was happy that rallying. More and more short-term players would have been added to the position. And finally, when the price is coming down, when they are taking it down, it removes all the players who initiated the trades over here, But if you really know what is happening, right, so you might be able to have a different perspective from the players. The perspective what I had was that when I find this, all the stops has been hunted down, I found an opportunity to add to the positions, because whenever the price, here is the value area low, whenever the price is plunging down below the value area low, mostly emotional traders come and short the markets. Emotional traders come and initiate or close their positions. But when they are seeing this move, that move was not slow and steady. If it is a slow and steady, I'm not bothered about it. I would have considered that as a good move. That move was faster and faster. So those kinds of faster moves are associated with emotional short-term sellers. The player, we call them as a player shorting, getting short in the hole. So players are getting short in the hole. Who are shorting below the value area players? Most of the times they are weaker hands. Price often moves against them. Price often tend to move against them. You getting my point?
Yeah.
Yeah. So typically the same case applicable whenever the value area is there, price is deviating away from the value area, then higher the odds that those players are mostly emotional players. Most of the time, price have a tendency to move against them.
The failed auction.
No, I'll come to that. I'll talk one by one. First, let me complete this. So next comes the path migration. So path migration gives amazing clues about what kind of players again we are dealing with. So think about this clue. One of the day where the letter A started, and letter A, B, C, D, E, F, G, H. Almost 8 letters got traded over here. Almost 8 TPOs over here. And that means that particular day, when you see in a day we have 13 letters, okay, right from letter A to M. When it comes to Nifty or Bank Nifty or any other stocks, we have total 18 letters. Only the last letter run for the 15 minutes. Every other letter run for 30 minutes. Only last letter run from 3:15 to 3:30. But that's fine, right? So one of the day what we're seeing is that a lot of balancing was happening. More activity was happening in this band, and lately only price is going up. Only price is going up. You know that point of control is not migrating. Only price is migrating, and buyers are going and getting carry forward. See that all these buyers, we call them as a momentum buyers. Most of the momentum buyers are the one who comes very late to the party. Especially, let's say you're seeing a good trend. Previously, you're seeing a good trend in the markets. It was assume that when it comes to Nifty, it is 200, 300 point trend, and all are short-term players. Short-term players would have been bought here. You might got a coming point of control or a poor lows. Again, short-term players. Again, short-term players, and again, short-term players. One of the day, what we are seeing is that point of control got built over here. Lately, only price is migrating, but point of control is not migrating. We call that as a point of control non-migration. Right from the day start, point of control sticks here. A good auction, what happens? Price goes up, it does a lot of activity, again goes up, it does a lot of activity. Initially your point of control will be here, but later second half of the day point of control shifts over here, and then price tend to go up. That is a good activity. But if the price is doing a lot of activity over here, and lately you're seeing a bigger push coming in, all these players are most likely what? Momentum chasers who are chasing momentum. Probably by that time you might be seeing yesterday high or 2-day high has been broken out. At times 4-day high, 5-day high would have been broken out. So it pulls more and more players into the system. But those players are very late to the party. They don't know that. But if you track market profile, you know that these guys are coming very late to the market. Somewhere we are very, very near to the high. Just like in the auto show, we call as an exhaustive high. Some sort of an exhaustive high it is. Probably one more day they will do some activity here, but again they will fall back into the fall back down. So typically end of the trend it used to happen, or very close to the end of the trend. Probably 1 or 2 days some balancing happens, and then price started coming down. When you are seeing this point of control non-migration is happening. Where it is happening, it matters a lot. So where it should happen is that a nice swing, where that swing is completely dominated by the short-term players. And finally, again, point of control is not migrating. Only price is migrating there. Those are the levels where we can say like the traders are getting more and more emotional. Most likely they are going to get trapped positionally, or at times the very next day itself price tend to go down. At times what happens, some more activity over here, and then price tend to come down. So one of the example I'll show you like how the reactions are. Like one of the days I recorded in Yes Bank. So here is Yes Bank setup. So here also we talk about patterns. These are a little bit of complex price action patterns. It also combines with the market distribution also. So let's look into this pattern. This is one of my favorite pattern. I would say that when it comes to positional trading, where you will be able to spot a top, a swing top. I'm talking about swing top here, a positional swing top with a greater odds. We call it as a dual momentum auction pattern. Think about how the point of control is happening over here. This is where the S-Bank charts. So let me zoom this chart a bit. Right, if you look into the S-Bank charts, so one of the day what was happening? Previously there was a good swing from a movement from 160 level to almost 200 level. This movement is from 160 to 200 level. 200 levels. And in S-Bank, what is happening? One of the day we got an earnings season announcement. Earning results are supposed to be announced. More activity was happening. See, the more activity was happening over here. Your point of control is over here. The next day, I mean the same day, last 1 hour price tend to shoot up. All these are momentum chases. They're just chasing the momentum because price announced and the news announcement came, and price was taking in one directional approach. You see that if it is good auction, what would happen? Price goes up some 3%, again some consolidation, and again some sort of an initiative drive, again some sort of a consolidation, and again it takes an initiative drive. We are at a very good swing high, and then one of the places where the weaker hands are chasing the momentum. It's hardly 30 minutes. It's hardly 30 minutes of price action, and you can see most of the activity happened. And in fact, the other day also what happens, price opens gap up. Price opens somewhere over here. Price opens here. It took the previous day high and immediately got back in, right? So that's how the top has been made, and it balances. And finally, what happened? You know what? Finally, what happened? They broken down from here to 170 levels. 170 levels. But in the meantime, they also given a couple of reversal examples. So one of the key thing is called, we call it as a double momentum auction reversal, where you see that the letter period is, it's at letter A. The letter A, first half an hour top came. Again, another first half an hour letter A top came, which is coming at a major swing high reference level. So we got a nice swing, upswing. You see that momentum players are coming and playing. They are mostly weaker hands. And the very next day, we had on top of letter A. Again, the very next day also, we are getting a top at letter A. That is a sign that this market has been topped out. So already we got a top signal when this indicates that we are very near to the top. The letter A and the one more letter A, which is an indication that we are very, again and again, it points to the information that all these are momentum sellers. The momentum sellers behave like they're pressing the price right from the letter A. Again, letter A, all these are stronger hand sellers. So that's why we call it as a dual momentum top. One of the patterns which we are repeatedly seeing in, even in Reliance, the current top was similarly similar to that. We already talked in the Slack group, and where the price fallen from 1280 level to 12115 levels, almost some 65-point crash in Reliance. So these kinds of patterns, when you're seeing it in a major swing high, it has a potential to go. The first thing what the market does is that it goes and mean towards the point of control levels. And you can see a lot of double mechanical reference here, double mechanical reference here, triple mechanical reference here. All these are kind of stops. So we predicted that the S-Bank could do something more down below 170 levels. At 170 levels, right? So what happens is that a lot of interesting setup happens. I'm gonna show you how the S-Bank looks like. So let me add S-Bank charts. So how to add a chart in NinjaTrader. So I'll go to Tools, Instruments. Let me check if I have an S-Bank. I don't have an S-Bank, so I have to add the symbol. So what I have done is that I went to the control center. I go to Tools. Mostly these days, global data feed or true data, where it automatically comes up. So you don't need to worry about it. But tools like eSignal on how to go and add manually. But that's fine. So click on add. And I'll say master instrument. I'll give a name, S-Bank. S-Bank, and I'll say currency as Indian currency. Tick size I'll choose as 0.05. That's the minimum price action movement. The tick size only will get multiplied by your TPO size. So choose appropriate tick size. Accordingly, you have to put your TPO size as well. And then the data feed which I am using is eSignal. So I'm going to use my symbol as bank G19-NSF. That points to February futures, February S-Bank futures. And I will, that's it. So I'll select an exchange. So I have to select, I go and select NSE from here. NSE, press OK, apply, and OK. So close. So file chart, I'll say S-Bank. First get the symbol. I have to connect to my database. So database is not connected. So connect eSignal. I guess it's connected. It should say okay, okay. Everything is connected. So now S-Bank data should come by any minute. Otherwise, I have to restart my data feed. Yeah. So S-Bank came, and I'll go to the template. Probably I'll try to find the Bell TPO Nifty futures which I applied. So it's the same settings I'm going to use anyways. Or probably I'll let's see whether it's coming or not. It's still saying calculating. Okay. It's taking a long bit of time. Let me do one thing. Let me close, and better let me apply fresh. So chart. I'll go and get S-Bank. S-Bank. Okay. Okay, so we should be getting the charts here, and right click, go to indicators, and scroll down to Bell Ultimate, Bell Market Profile Ultimate. So the difference between Bell Market Profile Ultimate is that it has inbuilt scanners, and the Bell Market Profile has it gives only the market profile point of control value area, whereas the Bell Market Profile Ultimate has automated reference lines, so AB power lows, priming point of control. Previously, we used to draw a lot using hand, but now we just prepare for the trades. So we don't even look into drawing the reference levels. Most of the reference level has been already drawn in the Market Profile Ultimate. So you'll be mostly prepared for the day the moment you open the charts. So again here, I'm going to remove a couple of things and apply. Yeah, apply. Some, okay, maybe I just missed out the indicator settings. The settings is that I prefer using TPO size of 2 and apply. It's taking a long time to compute. But I'll do one thing, I'll close and reopen NinjaTrader. Ninja. Nifty is getting plotted properly. Yeah. So this is Nifty. And Yes Bank is still struggling to plot. What is the reason? Okay, never mind. What I can do is I'll close this. Try to apply Yes Bank. Okay, never mind. Yes, I just start off showing an interesting pattern there. Let me try with the Bank Nifty at least. It's beginning of February. Yeah. So Bank Nifty is also having back-to-back Praveen point of control. We call that as a back-to-back Praveen point of control. So this is one Praveen point of control. Yesterday is also a Praveen point of control. When such setups are happening, usually it's a weaker markets. So price always have a tendency to go and catch those levels. So again, that means two Praveen point of control in a row. That particular day is dominated by the short-term players. Very rarely it goes for 4 primary point of control or 5 primary point of control. The one which is happening in Bank Nifty, which used to, the one which is happening in Nifty, like where we are having more and more primary point of control. This repeated some during Rajasthan election, it repeated, and all the primary point of control cleared. And prior to that, it repeated during 2017. These kinds of multiple primary point of control without clearing the price going down, it's very, very rare. Right, so and it also gives extreme odds also while coming and trading these kinds of patterns, and these are very quite common patterns. There is a primary point of control, tomorrow is also a primary point of control, and most of the time price goes and move against those primary point of control. This is very common, and what is not common is that having multiple primary point of control, which is not very common. Hardly it occurs once every year, once or twice it occurs. And that is very, very rare. So, but there are no much of mechanical patterns from the market profile. We had one stops over here. Already one of the stop, a double mechanical reference got a hit already, but really not much of an levels. Last 2 days. 20th February and 21st February, we dealt with more and more with short-term players, mostly short-term buyers. And currently, the initial focus towards the poor low, the primary point of control. But at the same time, if you look at the unfinished auction from the order flow, right? So these are levels one can define from the unfinished. So we'll say unsecured levels from OFA, unsecured OFA high. So that means that particular day is having high volume from the order flow. So the volume was typically high from the order flow, kind of a trap buyer or a trap seller. Similar trap buyer or trap seller was there at 27,352 levels. So this level, there is one more unsecured OFA levels, or the unsecured OFA levels. These are the two levels which I'm monitoring for the series. So the on the upper side, right? So this is one level, and this is another level for the series. Those two levels are I calculated from the order flow, but from the profile perspective, I don't really see any weaker, not much of a weaker references level from the profile in Bank Nifty. From the order flow, yes, we have one levels. Now let's talk about a failed auction. Failed auction is one interesting pattern. So sometime back we had in Bank Nifty, I believe. Bank Nifty, there was a failed auction levels. It's one of the interesting plays, right? So you see that one of the level is showing as a failed auction sell. So what it has been built on top of the initial balance. Look into the initial balance range, the first 1 hour range here, letter A and B period, high and low. So what is happening here is that one of the day here, the letter A, the initial balance low. So when I say initial balance low, we also call that as an initial balance is IB. IB is initial balance, first 1 hour range. That range is mostly created by the intraday players or trading money mostly, because when the market opens, they are the first one to flood into the markets. No matter what, they have analysis. They will be mostly initiating trades around 9 to 10, typically because of 80 to 90% of the time, we are more and more going to deal with such kind of players. So first 1 hour, wherever the price range is done, it's mostly done by the short-term trading community. Yeah, at times, it could be a combination of short-term and long-term. At times, it could be a combination of short-term and intraday players. But wherever you're finding the short-term and intraday players, they are the one who set the range in the first 1 hour, right? And the low we call as an IB low, or first 1 hour low. It's as good as the ORB breakout strategy, right? So what is happening here is that IB low here has been broken by a couple of ticks at C period. See that only 1, 2, 3, 4, 5, 6, 7, 8 ticks. Only C period went down below the IB low. None of the letters went down below the IB low. And then price got back in and it moved to the other side of the IB. Price went to the IB high. And that is why that level is called as a failed auction sell, where the price takes a U-turn all in a sudden and it moved to the other side. the significance is that it is not a good way of auctioning. This is how a market will not auction in a good manner. So again, price will again revisit back to test that level within T plus 5 days. Within next 5 days, you can expect a revisit. So T plus 5, you can anticipate a revisit over there. So T plus 5 is what? One can anticipate a revisit precisely to the low of these levels. The low of these levels get revisit back because that's how the price will come back only to complete the auction. It's a poorly conducted auction here, and that is why it is called as a failed auction. And price will come back to revisit back to complete the auction. In a month, typically you'll get 1 or 2 failed auction levels. Very rarely it goes to 3. When it comes to Nifty, Bank Nifty, the winning odds of price revisiting in next T plus 5 days is closely, I would say that 75% of the time, a failed auction gets cleared faster. Sometimes it takes 3 days, sometimes it takes 4 days, but that level, price having the higher odds of revisiting back. Are there any failed auction reference levels? Not much in Bank Nifty. So only one came and recently it got cleared. Hardly in a month, as I said, you get only 1 or 2 failed auctions in a month. And that definitely gives you trading odds to fade towards those levels. And when it comes to Nifty, I don't think recently in February series, we don't have any failed auction. Last series, we got one and that also got cleared. So we got one more failed auction here. So think about this level. There is a failed auction here. So price went down. Next day also it haven't touched, but it went down. Again, it went down for the 3rd day. So this has been done for almost how many days? Almost 4 days. Price went without clearing those levels. So this is day number 1. This is day number 1 or T plus 1. You can say like T plus 1. T plus 1. Okay, I'm sorry. The failed auction was on 14th. The failed auction is on 14th. Let me go and show you the 14th first. Right, so the letter J period is which happens over here. Price went above the IB high. This is IB high. Only one letter went above the IB high. Right, so you never seen letter K or any other letter coming and trading above that. Not even a 1 tick. Right, so letter J went above that level. Within 30 minutes, it got pulled back and price moved to the other side again. Right, so that is why we call that as a failed auction. Why? These levels have the visit to come and revisit in the within next T plus 5 days. But then it comes in the visit in the form of a free ticks. Right, so really there is no much of trading volume happens over here. Most of the volume happens over here, but some volume it happens over here at the open. So it's being considered as an that failed auction level came. The very next day it got cleared out. Failed auction has a higher odds of revisiting back. So that level is also one form of an open rejection reverse, which I'm going to talk in the second half, which is also an ORR top. That means even this level also some stops would have been placed over there. Some stops would have been placed above the ORR top. Typically, price go and take those open rejection level stuff there. We do one thing, we'll take a small break, and after 10 minutes, we'll come and talk more about the open types and profile structures. Right? That will help you to see which where one should monitor the order flow. Right? So what places you should monitor the order flow, especially taking profile from the references. Anyways, we are going to talk about the markets in the next 5 trading days. But now we'll focus on the concepts and we'll look into the profile structures one by one. Profile structures and the open types one by one. Right, so in the meantime, we'll take a 10-minute break and we'll assemble back by 16:40. 45, right? Yeah. Until then, I'll be on mute. The patterns which we're going to talk about, the price distribution patterns are going. We're not going to talk about either it's a bullish pattern or a bearish pattern. I mean, we are going to understand more and more about the market behavior, right? So, a couple of profile distribution patterns which we are going to discuss about it. These are basic distribution patterns which you can find on most of the internet channels or most of the books. So, before getting into the session, that's one of the concepts one you have to learn. It's called as a range extension. Ideally, I don't use the range extension in my concepts. We don't trade the initial balance, buy above the initial balance high, sell below the initial balance high, buy above the value area, sell below the value area. We don't use. But here, the range extension is nothing but the breakout of the IB levels, the initial balance levels. I mean, the first 1 hour low. So here in this case, the IB low, that is a letter A period low, is getting breakout. So the letter A period high and low is the first 1 hour high and low in this case. It is getting broken at the E period. So we'll say like it's a directional directional OTF is dominating. When I say OTF, OTF means other time frames. Anything other than intraday players, we call it as an OTF player. So that means that particular day OTF is showing up. So that OTF means what? Any other player other than intraday player. They are the one who can break the first 1 hour range. So who does the first 1 hour range? Mostly it will be done by the intraday players, right? So the break of the initial balance, we can say like other time frame players are present. Maybe it could be long-term player, it could be short-term player, it could be intermediate player, it could be any other player. But other than intraday players are showing up on that particular day. So the range extension at times happens on one side, at times it happens on both the sides. If it is happening on both the sides, then one can say that. So look at this example. The IB is broken on both the sides. The initial balance is getting broken on both the sides. That is why we'll say like both the sides, the one time frame, other time frame participants are present in this particular case. So again, we also talk about buying tails and selling tails. The top of the tail is called as the selling tail, and bottom of the tail is called as the buying tail. Typically, it is characterized by the single prints. The single prints at the top and the single prints at the bottom. We need at least more than 2 TPOs. 2 TPOs or more than 2 TPOs, we call it as a good tail. If it is one tail, one TPO, or there are no TPO, then that particular high is called as the poor high. Or if the lows are also we call as a poor lows, if there is no sufficient single print tails at the top or at the day's bottom, right? And again, coming back to the profile distribution, right? So when it comes to profile distribution, we have classified into almost 8 categories. Wherever you're going to see the same kind of patterns every other day. None of the patterns are bullish or bearish, right? So it's just one form of distribution. Most of the profile distribution comes into these categories. Right? So one is a non-trend day. A non-trend day is like the initial balance get created, but price mostly rotates. Most of the time price will be rotating around this range, which is a sign that there is no serious money on that particular day. Most likely only traders compete against each other. Mostly intraday players are dominating there. The end of the day, the volume will be very low, dull, boring kind of moment. You can feel that there is no IB breakout. Other time frame participants are showing up. Maybe they might be long-term player might be present because every other day mutual fund does some business, FIs do some business in the markets. Every other day, long-term players or short-term players, they have some business to do in the markets. But on that particular day, who is more dominating at what it matters? In these kinds of days, it will be mostly dominated only by traders. Only traders are there in that kind of day. Probably it could happen one day before one day before any major announcement. Let's say if an announcement is possible tomorrow, so one day before market gets into a quiet mode. Something like one day before RBI policy announcement, Bank Nifty might be doing dull, boring activity, right? So really there is no interested parties playing that game. Most likely the traders are coming and playing here and there, and there's no real opportunity in these kinds of days, right? So my purpose is not to predict these kind of days when it is happening, why it is happening, who is responsible for those kind of movement. That is the way we approach the markets. That is, in these kinds of days, there are no real risk reward games where you can play. Entire day you'll be feeling the dull boringness. And next comes one more interesting day type. It's normal day. A normal day is quite common. 65% of the time we are going to see the normal day, where it is a typical normal distribution pattern. It's kind of a normal distribution pattern you're going to get most of the time. So these kinds of pattern set up 65% of the time. Whereas a positional trader, these kinds of zones very rarely provides opportunity at the open, but most of the time market does its most of the activity, and then the remainder of the session market is going to balance. So as an intraday trader, you're going to face 65% of the time these kinds of markets, right? So most of the time activity becomes quick. So letter A and B and C, and then no activity. Most of the time market went up, goes up. It's going to build the point of control. See that point of price is spending more time in building that point of control. Letter A went, letter B also went down, and letter C, at letter C it got stopped. First 1.5 hours, price got stopped, and it pulled back. Again, it come down, again pull back, come down, pull back, come down, pull back. It started building the point of control. These kinds of activity you're going to see 65% of the time, and that brings only an opportunity from an intraday player only to take a mean reversion bets. Mostly these kinds of days where we'll be waiting for the price to go to an extreme, where the price goes to an extreme, where the IB breakout happens only one places, right? So do I trade IB breakouts? No, I don't trade, because trading the IB breakout, if it is possible, if it is profitable, right now everyone should be profitable by trading the simple IB breakouts. So we don't trade IB. IB breakouts are profitable only 30% of the time, right? So are even less than that, probably 25% of the time if you add commission slippages, everything. And so this comes the normal variation day, which is mostly loved by most of the traders. These are the places where market moves to the new extreme, where the profile itself, very less activity happens. Well, probably price opens, it does 1 or 3 or 4 times. A point of control will be 4 TPOs would have been formed, and again price moves up, 3-4 activities, again price moves up, again 2-3 activity, again it moves up. It's a good trend will be getting developed. We call that as a normal variation day because the most of the trading activity initially would have been happened over here. See that almost 6 or 7 activity already happens over here, and lately the break is coming. Again it does a distribution, again it moves. So these are the places where playing the IB breakouts are profitable. But I mean, you cannot predict which this day could be a normal day or this day could be a normal variation day. You cannot predict like that, but this is one form of day where you can recognize that this is a normal variation day. And it's highly elongated, and IB breaks out only on one direction, and most likely the range extension is twice the IB. The range extension is twice the IB, and the IB gets broken on only one side. And yeah, hardly in a month you will get 3 or 4 such kind of profiles. These are the profiles which moves Nifty to 80 points or 100 points kind of stuff. And trend day, one of everyone's favorite day. It's very, very rare, but when it comes and one time frames only in one direction throughout the day. So what is happening here is that each and every letter price is making continuously higher high, higher high, higher high, and higher high, higher high. It's just this kind of pattern. So like kind of it's one time. We call this as a one time framing. Hardly it breaks only once. That way it happens during middle of the markets, and again the one time framing continues throughout the day. Right? When you're seeing that kind of one time framing, what you should do is that you should recognize that possibly this day could turn into a one time framing. That is the only thing. When you're seeing the letter A is one time framing, B, C, D, E, F, G, it's one time framing. There is every possibilities are there that if that previous bar low is not going to broken, there is a possibility that this could be a one time framing. And even if there's a break, hardly one time you can expect a break. Again, that one time framing could start continuing in a one direction, right? So when one time framing is happening, one of the things a trader should not do is that one should not go and fight in the direction against the markets. Many traders try to fade the one time framing. They really cannot control themselves because they will be seeing that the RSI will be hitting 60, 90 levels or even 100 levels. They cannot control themselves. But as long as the buyers are in control, on a trend day, every other trader will be focused on only one direction. Every other traders, let it be an intraday player or a short-term player or a long-term player, every other participants are aligned in one single direction. That is why right from the day start, the price keeps on moving up and up and up and up and up in one direction. Price goes up without any rotations, right? So whereas other trading days, you're going to see this kind of rotation. Price goes up, it does a lot of rotations. It builds letter ABC balancing, again goes up. It does some rotations, again it goes up, does some rotation and goes up. Right, so this is how market moves. Or sometimes market does a lot of balancing and late move happens. Or sometimes market goes ups, downs, up, down, like balancing at the center. Right, so that is how it happens. But the kind of trend day which is happening is hardly less than 5%. I would say that out of 100 profiles, hardly 2 profiles will be trend day. Very rarely you're going to see a trend day. Even in stocks also, very rarely you're going to see a trend day. But they move the markets to a different location. And next comes the double distribution day, which is a little bit common compared to a trend day, but it's also one form of trend day, right? Where there are 2 distributions. First, initially it forms a lower distribution and a shoot up, followed by a second distribution. This is distribution number 1, and followed by a single print. You see that there is a single print section where the single prints are coming in between the profile. This is where it gives you a place to measure a level, which that level could act like a kind of a support. And that is a level which you have to monitor for the next day. When I say you have to monitor for the next day, well, let's say price is opening over here, and the price could come and break this level, which is every possibility you can do that. But when more and more time is spending over here, you know that that level is getting accepted. What you're seeing is a kind of this level is supposed to be a support. It breaks, and then that level is completely rejected, and more prices. Time is spending more time above that reference level, which is a very good sentiment, right? So most of the single print zones, we usually use it as a reference level. We draw a reference level saying that it's a double distribution balance, and every time price, let's say price is spending more time, and again middle of the day price is dropping over here and coming back up, we'll be looking for a long opportunity. Right, so double distribution zones are very interesting zones. One should not look for a positional chart unless price started accepting down below this double distribution balance. So you should not do that because it's quite vulnerable unless the support zones are not broken. If it is a good sell-off, what happens? Price go through the double distribution day. It does more activity. Build the point of control below that level, and again it builds the point of control below that level, and price stays down. That is how good sell-off happens, right? So typically a double distribution level just like that, it cannot break. Mostly price opens higher, all of a sudden they come to the double distribution level, they take a support and they again go back higher. So this is what the common behavior you can see with a double distribution day. Most of the time that single print zones act like a kind of a support zones. Right, so if you want to show me in Nifty how it looks like, so Nifty last 2 days back we had a double distribution. So you can see it 2 distributions over here, which is separated by a single printer. You see the E period single prints here. There is only one letter got traded. That is why it is called as a single print zone. This entire period is called as a single print zone. And I marked a line above that level saying that it is a double distribution reference level. So I'll be putting in, I'll say that level as this particular level. I draw a line. I say that level as a single print zone. So I'll say like that single print zone, we call it as a double distribution balance. I'll say double distribution balance, or I'll say like I mark a reference line in my charts saying that it's a DD balance, right? And that is one of the reference level I will be monitoring positionally. As I said, some of the levels are intraday levels, some of the levels are positional levels. The levels poor low, AB poor low, all these are positional levels. Like that, the double distribution balance is also one form of what? One form of short-term reference levels. So what has happened on last Friday is that price went down, little bit down, hardly it went 2 points down below that double distribution balance, and then it really got back into the range. So if you want to positionally chart this markets, what you have to accept is that you have to price has to go down, point of control has to build lower, and more time price has to spend over it. That is a good sell-off. A bad sell-off is like price starts over here, they go down below the levels again, come back, do more activity, and doing something. This is not a good sell-off at all. Any good sell-off, you need to look for an acceptance. When I say acceptance, price has to break, more activity has to happen down below that, letter B, C, D, E, F, every other activity has to happen down below that, and it has to stay down below that. This is what we say, like, okay, it's a good confidence selling. Otherwise, our reading will be, if you look into the Slack channel, my reading on that day, it is a low confidence sell-off, right? So the low confidence sell-off remained, and really there are no serious sellers. If there are serious sellers, they would have been pushed the price down, and they will be start doing activity. They'll not be doing activity over here. So, but where that most of the activity was started happening above that level, that means it's not a serious sell-off. But think about the lows. The lows are dominated by the short-term players, which is still vulnerable to come and revisit again. If at all they come and revisiting again, and again, if you started price going back and you seeing letter A, C, D, E, F, everything is started happening over here, then means the sell-off which has happened over here, it's not a serious sell-off. Maybe one right place to look for a 10,900 levels one more time, right? So that is how we will build scenarios based upon what kind of players behave, how the point of control is getting accepted. So whether this particular level, which I am carry forwarding for quite some time, is it getting rejected again? If it is getting rejected again, then what could be the possibility where the market could flow? What are the nearest odds where market could travel? Right? That is how one should evaluate that particular day. And in fact, it is also ended up like a prominent point of control. So you see that there are more and more odds are building on the downside as well equally. The downside, upside also odds are increased equally. Downside also increased equally. There is one prominent point of control, one poor low, one AB poor low. On the same day, we got a prominent point of control structure as well. So there are 4 levels on the downside, and similarly, there are 4 levels on the upper side as well. Usually, these kinds of market will not put you in this kind of dilemma, right? So now it's been building like another 4 prominent point of control on the upper side, and almost 4 levels on the downside. It's got somewhere stuck in the middle. So most likely, I believe market is most likely to travel in a range-bound board between 10,600 to 11,000 levels next week, next 4 days. Anyways, we are again near to the end of the expiry. But most likely, any break, it has the odds of coming back again. Any upside movement, it has the odds of coming down towards the downside. So really, I'm not seeing any break down below these levels or break up above 11,000 plus levels. So, but if at all, without breaking, the market is moving still again slowly and steadily. Let's say this market is moving slowly and steadily, clearing all those prominent point of control one by one. It is a dangerous market. One should really look for a positional opportunity to fade everyone again. Right? So yeah, let's see how the market goes. Accordingly, we'll strategize. Right? So again, coming back to the structure, we talked about the double distribution reference level, where that single print zones. In this case, the double distribution happens and then price went up. The price is going up, the top of the balance. So this is a top balance. The top balance reference is what I'll consider as my reference. Whereas if the if the double distribution is happening, so here is the double distribution if it is happening, and let's say price went down. In that case, the bottom of the balance will be considered as my reference level. Right? So we'll be using that single print zones to draw a reference line. So if at all, if I want to, many times what happens, price opens here, it has more activity. Middle of the day, they go to that level. By the meantime, if you look into the point of control would have been built over here around 11 o'clock or 12 o'clock. If you see, point of control would have been built over here, and they go back to this level. They try to break. At times, a little bit of break could come, but eventually they try to mean revert back. The first thing what they will do is that they go and revisit the point of control, because point of control acts like a magnet. And again, you see price goes down again, activity will be mostly building around the point of control. Right. So one of the trade location will be coming here to short the markets typically towards an intraday position to mean revert towards the point of control, because it is if it is a good buyer, they would have been they will not be rejecting those levels. A good buyer will be pushing up. When they are pushing up, they do a lot more activity above that reference level, and they stay above that reference levels. So, but that is not, if that is not happening, price is rejecting there. One of the best place to look for a short towards the point of control, So we'll be deriving the double distribution reference level to prepare for those days. I don't know really this is going to happen or not, but if these kinds of setups are happening, that will be one part of my scenarios. I'll be thinking about the scenario. What if the price is going to do like this, and middle of the day, if the price is going to come and check those point of control, how I should prepare. So that one of the way we prepare for such kind of trades when double distribution is really there in the markets, right? So again, a double distribution, these kind of single prints also come in the form of a spikes. Really, in this PPT, I haven't talked about the spikes, but the spikes which occurred recently, spikes are nothing but, so look into this example. This is also one, it looks like a double distribution, but it is not. We call that as a spike. So you see that there is a distribution which has happened, followed by a single print. So here is the single print zone, and then a little bit of distribution. So this we call it as a spike. In that case, what we'll be doing is that we'll be taking the spike base as a reference. When I say spike base, a spike is mostly a last 45 minutes of activity. So I'll be drawing a spike base. I mean, it's almost every other market profile player, they knows that what is a spike, and that acts like the spike base acts like a reference for the very next day. Price staying above the spike base, it's totally bullish. Even though if you have any bearish views, one have to stay away from that. So it's typically, again, it's a reference taken over the single print zones. These single print zones, the top of the zone, we call it as what? We call that as a spike base. So we call this as a spike base. Spike base. Look into the next day how the activity was happening. On the very next day, if I split the profile, you'll come to know how the activity happened. Right. So what was happening here is that price opens above the spike. It hardly touches a bit, and then more activity started happening about letter A, B, C, D, E, F. Almost every letter started playing. The point of control started building above the spike base. We call that as an acceptance above the spike base, which is totally bullish, which has the odds of continuation on the upper side. Right. So if it is a bearish view, what will happen? Price opens here. Initially they might try to do some activity. More activity would have been happened. Letter A, B, C, D, all the letters would have been happen over there. Even they might try to take the day low, and they will come back. They will try to take the spike base. They try to reject. So the rejection point is what, by the time you know that almost 4 or 5 TPO would have been happened at the point of control over here. 4, 5, 6 TPO would have been formed at the point of control. Price goes back above the spike base. Middle of the day they reject. If the middle of the day they are rejecting the spike base, again it is a potential shorting opportunity. Maybe we can anticipate towards a test of a point of control, or even towards the day low, right? So that is how we'll prepare. Most likely this is one of the scenario where it is a bearish scenario, and the bullish scenario, it goes like this. Bullish scenario, price opens above that range. It is mostly trading above the point of control. I mean, trading above the previous day spike base. It's a totally bullish game where you can expect some sort of an rally in the markets. And we also use single prints to finalize targets. So for example, whenever the price is traveling in a single print zones, look into this tail here. The tail is completely filled with single prints. This tail is also completely filled with single prints. Okay, when the price is traveling above the single prints, totally it goes and clears the single print faster, because more and more stops will be happening in this band. Whenever the tails are bigger and bigger, you see the tails are very bigger in this zone on that particular day. Every other day the tails are pretty smaller, but see the length of the tail is very high. The length of the tail is very high, and the price is traveling in those tail zones. Usually it clears most of the tails faster. Typically, you can anticipate that when on 21st of February, my comment was like price was moving in a single print zones, so we can expect 10,810 or 12 to come and achieve it. It usually come and achieve it at a very faster rate, right? So that particular day, Nifty had almost done 140 points. Okay. And coming back to the topic here, so we discussed about double distribution. The next type is the neutral day extreme. So neutral day extreme are quite common these days, at least in sideways markets, where the IB got broken on both the sides. The IB gets broken on both the sides, but one of the day, the price tend to close at the day's extreme. You see that IB is getting broken on both the sides. That's one case. IB breaks on the downside also. IB breaks on the upper side also. There are certain days, a neutral day extreme will be coming up with a late spike also. Like market will be, there will be IB. It is a very small IB. Price tend to go and rotate within this range. It breaks the day low, but lately price does a spike. If these kind of spike is coming in at the market high, right? So at the swing high, not the major swing high, then this kind of neutral days are potential market tops. One way we figure out that these kind of neutral day extremes are potential market tops. Otherwise, neutral day extreme can happen anywhere. But if it is happening with at a major swing high, especially with a potential spike, it is also formed a last 45-minute spike. Last 45-minute spike where it could be one of the indication that we are at the top, or probably we are one day near to the top. So something like that. So one of the example I can show you is a typical neutral day extreme occurred in S Bank. So we already looked into the S Bank. You see this particular example. So this is letter A. This is letter A here. That's letter A and B. Right. So this letter, when the announcement came, it broke on the day low and it went up high. Right. So that is where it forms on any day. Any means neutral day extreme. It says extreme because price closed at one of the days extreme. Either it closes at the extreme day high or at the day low. In this case, it is price is closing at the day high. It is also forming a spike. Right. It is also forming a spike. It is also forming a spike where the point of control is not migrating, only price is migrating. So think about it, any information we are getting in OH, any day, neutral day, extreme day, and the price is spiking up. All these spike, all are momentum chasers. They are coming very late to the markets. Most likely they're going to get into a trap, and most likely market will have the higher odds of reversal back. And we are also having other setups saying that it's a dual momentum auction setup. The immediate reversal zone is towards the what? Point of control, which is closely 15%. This move is 15%. That means we can expect again a reversion of 15% down back. Right. So from 24th Jan onwards, what happened was that price went down almost negative every other day for continuously for 14 days. Continuously they went down for 14 days, and then they went short to too short. There is where the short covering recovery happened. So in the meantime, it had provided a tremendous trading opportunity to fade this information, to fade this entire information. And in fact, there are a lot of stop loss also there to fade, and then again to fade towards 180 levels. So neutral extreme day, where it is happening, it really matters, and how it is happening, it really matters. Otherwise, it occurs at many places. It occurs in between the trend also. But if it is coming at a major swing high, that too, if it is forming in kind of a spike base, one of the places where we say that inventory is getting long to too long, probably the players are positioned themselves in a dangerously long position. Maybe profit booking could happen, right? So with a very, very higher probability. But the key thing is that IB gets broken on both the sides. Next comes the neutral day center. Typically, this is a dull, boring day. Maybe it could happen one day before the event, or it can also happen any other place. Where the IB gets broken on both the sides, and price typically closes at the center. Instead of closing at the extreme, it closes at the center. That's why we call it a neutral day center. But the characteristic will be mostly dull, boring, irritating markets. Right? So one can feel that dullness. Nobody is getting anything out of it because market balances at the center. Next comes the P-shaped profile. P-shaped profile is again very interesting. It always happens in a bull market. A typical bull market is characterized by a P-shaped profile, where it is one form of a place where new money comes into it and old money does the short covering. So always price starts somewhere and it drives. The first 1 hour will be the drive. It's a nice cool drive where most of the activity will be happen in the first 1 hour itself, and rest of the day they try to do a balancing at the top. Right, so price opens here and it takes a drive. Always the drive is on the upper side, and the first 1 hour or first 1.5 hour, most of the activity would have been done. Remainder of the day we balance. So that is why we say that the entire drive is mostly because of old money is covering their shorts, and at times old money covers their short and new money enters into the business of buying. So new money, especially the institutions, will be buying in some form of a P-shaped profile. First, they'll try to find a liquidity zone. So probably in the order flow, it will be looking like this. The first 1 hour drive will be an initiative drive, and remainder of the session there will be a lot of responsive activity, and there'll be a responsive activity here, and initiative drive over here. Where in the initiative drive, they move the price to find the sellers. The institution will move the price to find the sellers. So that means the sellers will come and sell at higher prices. Probably some short-term players might be in a profit. They want to sell. So all the selling quantity, this institutions will be acquiring those in the form of a responsive action. Right. So that responsive action is what the top B-shaped balance is all about. And so I'll say like this is responsive activity. They'll be slowly, steadily buying over there in the form of limit orders. So where you can find a lot of responsive activity in a P-shaped profile days, whereas the first 1 hour will be characterized by a complete initiative auction. So what is an initiative auction? Where the price is traveling in a low liquid zones. The institution does that only to find the liquid zones to do more business, especially to accumulate in this case. So here a lot of accumulation happens at the P-shaped balance top, right? And at times what happens, those P-shaped drive was also combined with old money covering their business and fresh money coming and buying at that level. That is why price even more faster it rallies with the high volumes, because it's not just only fresh money buying, old money is also closing their business over there. Old shorts are getting covered, right? So once you are a buyer, next you are a seller. Once you are a seller, next you are a buyer. So whoever shorted here, they are forced to cover in their P-shape in that initial drive. Right? That is a typical signs of a transition from bull market to bear market to a bull market. A P-shaped profile is mostly in transition zones. Usually, most of the P-shaped profiles are bullish. Whenever it's happening, it typically bring more, especially in a huge downtrend, and followed by that balancing and a P-shaped profile. It moves the market typically for quite to a different level. And there are many days what happens is that the P-shaped balance, right? This P-shaped balance is what we take as a short-term reference. And many times what they do some balancing activity here. They try to test this level and again they go back. Next day also they come and test and they go back up. So all these places where you'll be seeing value area will be overlapping, value area will be overlapping. Then they took a drive. So there'll be a lot of accumulation might be happening at times in this place from the institutions. So if these are interested parties, if they are accumulating here, and they might be accumulating more because more supply will be here and more supply will be here. Once the supply is over, they again taken one more initiative drive. Right. So P-shaped profiles are always interesting. Next comes the B-shaped profile. B-shaped profile is the opposite of what P-shaped profile is all about. In a B-shaped profile, you see the similar initiative drive. That initiative drive all of a sudden price breaks down, right? So it is mostly because of a old money getting out of the business. It's not new money selling. Very, very rarely it will be new money selling. Typically, when you are seeing a V-shaped profile, in a good uptrend, a lot of profit booking will be happening in the form of a V-shaped profile. So V-shaped profile is that some profit booking happens and that old money is getting out of the business over here. And that V-shaped profile will act like a reference. In a very short term, one can expect some resistance over here. V-shaped profile, one expect a resistance over here, but typically those levels will be taken out. So their V-shape is not a strong resistance also, but it's a temporary resistance, but it can be broken out. To show that, I can show the current V-shaped profile which happened in Nifty. So this is Nifty charts, and one of the day we got this V-shaped profile. You're able to spot on V-shaped profile here. There was a liquidation, and there was a V-shaped profile, right? So the very next day, price was trying to attempt and test towards the P-shaped profile. Nothing was happening over there. Nothing was happening over there, and we got a rejection also. We got a rejection, and we went down. We went clearly down below the V-shaped level. So this particular day, if I draw a reference line over here, let me zoom a little bit. So we got a V-shaped profile on when? We got a V-shaped profile on 15th, yeah, 15th, 18th. 18th we got a V-shaped profile. That V-shaped balance, prior to accepting above the balance, more activity happened on the downside. Price went twice in 2 candles, but then point of control was here. It was a rejection actually. Basically, price went back into the point of control, and again they completely rejected towards the day low. But at the same time, that reference, the reference of the V-shaped reference over here, it's a temporary rejection, but price always go and accept above that range. And it's temporarily bearish, but positionally it is bullish one. That's what we had seen so far. Most of the V-shaped profile has a temporary bearish characteristic. When it comes to stocks, yeah, even a crash of 5% from the V-shaped profile is possible. But whatever the crash comes in, entire crash get retraced back, and the price even start going above the V-shaped profile. But that is a characteristic of a bull market. Whenever you are seeing a V-shaped profile, temporarily there will be a crash, and eventually we will revert back. Okay, now. But eventually it indicates only long money. I mean, old longs are getting liquidated, so that old money is exiting their longs. That's what it means typically. Anything beyond that, we don't look into much of interpretation from a V-shaped profile. So we don't need to look into all these things. Next comes the open drive types. This is also, we are not going to predict anything out of it. This is one way. So what we have seen so far is a way how a profile could be building. Right? Initially we've seen non-trend day. Typically it is characterized by low volumes. Next comes a normal day. Normal day is where most of the activity happens. Typically it ends up in a kind of a prominent point of control or so. Mostly it is characterized by short-term players. Right? So most of the normal days are prominent point of control. And some of them are normal, neutral extreme, neutral day centered. And the normal variation day is what most of the other time frame participants, especially long time frame players or intermediate players or short term players, show their presence. And they also show their presence on a trend day as well, especially the bigger time frames. The bigger time frames also show their presence on a double distribution as well. And especially on a double distribution day, it is characterized by a single prints. Wherever the single prints are coming in between the profile, that will act like a potential support zone or a resistance zone. We talked about this. We take a short-term reference from the top of the distribution if it is an uptrending double distribution day. If it is a downtrending double distribution day, then we will take the bottom of the double distribution balance as the reference, right? And So when I say balance, I typically mean this as a balance. So there is a lot of the distribution which is happening. So this distribution, we call that as a balance. Again, there is one more distribution. We call that as a balanced market. So when I say today's market is a balanced market, that means more distribution happened at the center. Right? You see that more distribution happens at the center. Whereas in imbalanced markets are characterized by less and less rotations. So this is an imbalanced markets where imbalanced markets are nothing but trending markets. Yeah, somebody's having a question. Any questions?
Yes, sir, Rajendra. You just mentioned that the B-shaped profile is temporarily bearish but eventually bullish.
Yeah.
Does it apply to B-shaped profile on the other way around, or do we have to really look at the context?
So we have to really look into the context. Not every P-shaped profiles are bullish, but especially a P-shaped profile which is appearing after the. So when talking about the P-shaped profile, right? So a P-shaped profile can occur at multiple places, right? So we have a classification, 3 to 4 classifications of P-shaped profile which we had seen. One of the P-shaped variants. Let me talk about the P-shaped variants over here. In that case, I would take a whiteboard. I believe, do we observe any rise and fall in the voices? Can anybody see that? No, right?
Voice is clear, sir. Voice is clear.
Okay.
Mr. Rajendran.
Yes, sir.
Now you can, somebody has talked on that level voice we are able to hear clearly, but not your voice. Let me be frank to you.
Okay.
So next Saturday, Sunday, you are going to conduct another session.
Yes, I'm going to do that.
I hope on that day we don't have the same problem. You see, somebody has asked a question that is very clear, very loud, clear, and.
How about me talking?
But your voice, I am not able to hear anything. Just something murmuring type is going on there.
Murmuring type, okay.
Let me be frank to you. I'm
not a person with a murmuring type.
Even though I'm using the earphones, I'm not able to get anything.
Oh, is it? Okay.
So,
how about now?
But it is not going to the same, what should I say, this one, same volume level. Suddenly something, I don't know whether you are able to hear what you are talking. That's what
my question to you is, even in this session, you felt that?
Yes. Let me be honest to you, because I don't want to bluff you, or I don't want to. I'm your well-wisher, you know me well, na? But
I know that, yeah.
So I just want to bring to your notice.
Nth time you're attending it. Okay. So anyways, let's talk about this P-shaped profile variant. One of the profile variant, there are different variants are there. The textbook says that P-shaped profile is always bullish. The textbook says that P-shape always means what? Always means new money is coming into it. But the real, when it comes to real market scenarios, the P-shaped profile can occur at multiple places. Many times we had seen from our past experience. And so I'm going to take a whiteboard here to explain where a P-shaped profile can come and how does it matters, right? So a P-shaped profile after a sustained downtrend, you see some balancing activity, then market initiates a P-shaped profile. This is typically bullish. Most of the times, positionally it is bullish. Market straight away they go for a drive, or if they find liquidity, the institutions will take all the liquidity and again they can take a drive. And at times what happens, these kinds of P-shaped profile will be broken like this, and lately they drive up, again they drive up. So this is how the interested parties behave in a typical downtrend followed by a consolidation. If you're seeing a P-shaped profile, you're going to see any of these variants. Whereas a P-shaped profile, after a sustained downtrend, assume that this is a sustained downtrend, one of the day we are getting a balance over here. The very next day, price opens lower and it comes back into the range. It also forms a P-shaped profile. This is typically bullish. This is typically bullish over here, right? And there are also cases, and P-shaped profile also comes like this. The price open, it will keep on sliding for quite some time. Next day they open lower, somewhere deep down they'll open lower. And there does a short covering rally, and there does a P-shaped profile. This is also typically bullish. But what is not bullish is let's say this market was going up, it was balancing, and it was even doing some activity over here. The very next day, price is doing some P-shaped profile. The very next day, price is doing some P-shaped profile, but it is still not breaking the day high or somewhere. It's just still kind of an inside bar range. This P-shaped profile, usually it's a sign that it is initiated by intraday players. More intraday players and short-term players got stuck. The very next day, what you will be seeing is that next day inventory correction will be happening against this P-shaped move. Right? Where the P-shaped move is happening, how it is happening, it really matters. There are certain P-shaped profile happens after a typical bull market. In a typical bull market, finally it ends up with a P-shaped structure. That P-shaped structure is acceptance down below this is positionally bearish, but I mean immediately it is bearish, but positionally they could come back and revisit at an all-time high. These kinds of P-shaped profile can also happen at an all-time high or a major swing high. If it is happening at a major swing high, it is temporarily bearish, but eventually they have all the odds of retracing back. Once the inventory is getting short to too short, if you're finding inventory is getting short to too short over here, then price have the tendency to mean revert back. These are some of the P-shaped variants, right? So we collected over a period of time. But always when it comes to a B-shaped profile, no matter what, wherever it is forming, it's the B-shaped profile are not serious profile, temporarily bearish, but always they will retrace it back. Right? Sometimes they will retrace back from the next day onwards, or 1 or 2 days of downtrend, and again they retrace back, or 3 days, 4 days of downtrend, then they retrace back. Eventually they retrace. Wherever we've seen that there is a B-shaped profile, they retrace back. Let it be stocks, let it be indices, let it be any other trading instruments. They retraced back above B-shaped profile. It's only temporarily bearish. So we keep a reference level as long as that level is not accepted above. Once the level price started moving above, point of control started building above, then I remove that reference level from my charting software. Until then, I'll be keep drawing that reference level. I'll maintain that reference level every day. We'll keep that information. We carry forward that information as long as those levels are not getting cleared. Right. So yeah, now I'll go back to the charts and we'll discuss some of the open types. Right. So with this open type, now how I have to deal with this profile information. Let's say you are seeing one of the day you are having an P-shaped profile. One of the day we are seeing a P-shaped profile, and when the price is coming down, and from the order flow, what you have to measure is that are you seeing any exhaustion patterns? Are you seeing some sort of an R delta longs? Or are you forming any momentum auction reversal patterns? So these are the locations where you can use order flow to time it, right? So you know that if it is not, if order flow is not showing anything, then probably some more continuation on the downside. Maybe the exhaustion could come over here, and from there again acceptance could happen. You're getting my point? So from the profile, you can build an you can build a what? You can build a context. You can anticipate what could happen, or what are the higher possibilities that Nifty could go and touch 10,900. But from the order flow, you can really use it to time it, where you can look for a momentum setups. That momentum setups could come in the form of an initiative drive, or it could come in the form of a momentum auction reversal setup, or R delta long setup, or some other way it will give you some sort of a potential opportunity. So combining the context will give you which side to play and why to play. Order flow will tell you how to time those trades, right? So the combining will give you greater odds, and probably getting in, getting out multiple times, you'll be able to do it if you are able to combine market profile and order flow properly. And so open drive. So we are going to talk about the market opening types. This is also nothing bearish or bullish, but this is one another way how a market could open, and where market takes advantage most of the time. The most interesting setups are the open drive and open test drive. This is what most of the players want, especially the traders. You buy it, and then straight away the market keeps going up. Right from the open, it keeps going up. So these are the two different setups where in an open drive setup, what is typically happening is that market opens and straight away it takes a drive, right? So market could open anywhere, and immediately it established the bottom in the first half an hour itself. First half an hour itself, it initiates the bottom, and the remainder of the day, it keeps moving up in one direction. That is what most of the traders want, but ideally market does very less amount of time. Very rarely, 7 days in a row, 8 days in a row, every day will be open drive, or every day will be an open test drive, right? Most of the time, market are not going to do this open drive, right? That means 80% of the time markets are not going to do the open drive. If you take 100 profiles, 80% of the profiles are, I mean, the best place is not at the open. So this is an open drive up. In this case, it's an open drive up. If the same thing happens, the top is happening in the first half an hour, and throughout the day, if it is reversing down, we call that as an open drive down. One of the places where the maximum trading opportunity is presented for the trader right from the open, right? And the second setup is open test drive. It scares the trader a little bit, but initially it scares the trader. Price opens, instead of driving up, the previous day was up, right? So people, when the price is opening, people also again they'll be anticipating the price to go up. But initially, what happens? It takes a drive down and establish the low in the first 30 minutes, and then start taking a drive. So that is why we call it as an open test drive, because it attempts to test the previous day's value area, or the price enters into the previous day's value area, and then the drive happens. I'm sorry. So this is also not very common. Hardly these two, open drive and open test drive, occurs only 20 to 25% of the time in the markets. The remainder of the session is what we're going to see. Open, this is one of the rejection type, open rejection type. So what is happening in this case is that price opens gap down. Price opens gap down. And then it got back into the range. It got back into the range and completely does more activity, and then it completely rejected the previous low, right? So price opens down. Instead of going and test drive down, they completely reversed, they completely back into the previous day's range. When I say previous day's range, price got back into the previous day's low, and more activity started happening above the previous day's low. They completely rejected the gap down, and they got back into this range. So these kinds of open rejection reverse, at times it is also one form of top. In my category, I classify open rejection reverse into two categories. One is a weaker open rejection reverse. Another one is a stronger open rejection reverse. When I say weaker open rejection reverse, it usually come in the form of an, there is an example I can take out in Nifty. In Nifty futures, see, one of the day, price opens gap up. So here is the red color letter. Open was above previous day high. So here, this is previous day high to me. Price opens above that. They completely rejected. They completely went down. So in this case, the tool will read you as an ORR. It is a ORR top. So it comes with a reference saying that it's a ORR top. And that is happening, that's not happening at a major swing high or not happening at the major swing low. It is happening intermediate level. Whenever it is happening at the intermediate level, I assume that, these levels is where most of the stop loss is getting built. Most likely the sell-off is happening from the short-term trading community. So I will carry this zone where the price is falling from here. Price always have the opportunity to come back and hit those stops. Right, so yeah, price had done that already. That game has been now over now. So that ORR top has been revisited. ORR has been, because it's a weaker ORR. I call that as a weaker ORR. Now, how I will say that it is a strong ORR? I will say strong ORR, especially, let me go back to the whiteboard again to explain what is the strong ORR, what is the weak ORR. A typical Let us assume that this is my previous day's range. This is my previous day's high-low range. Assume that it's a positive candle. So this is my previous day's high and low range. The very next day, price opens gap up and completely rejected. While rejecting, when the point of control is building inside the range, and more distribution is happening in this band. Point of control is not shifting. Still, that I'll consider this as a weaker ORR. Price always have when it's breaking, it breaks really faster because more stops would have been coming above this zone. I'll call that as a weaker ORR. But instead, a good strong open rejection reverse will be like they reject and they do a lot of activity. Letter B, C, D will be forming over here, and then they drop down, and then they reject again, and then they do a complete rejection. You'll be seeing kind of an outside bar, right? So price opens above previous day high. It opens above previous day high. They come down. They do a lot of distribution over here. Again, they come down. They do a lot of distribution here. Your point of control initially will be here, and then by around 1 o'clock or 2 o'clock, your point of control would have been shifted down. Maybe some four TPOs would have been formed over here, and here 5 or 6 TPO would have been formed over here, and finally rejects. This is a very strong rejection. This has a very high odds of continuation on the downside, right? In that case, the reference level will act like the ORR top level will act like a potential strong resistance zone. So we call this as a strong ORR zone. And a strong ORR can also come at a major swing high. So let's say the ORR which came over here, which is coming at a major swing high. Already there was a swing, and one of the day we have a candle, and finally at the major swing high, it could be a 3-month high or a multi-month high or a 6-month high or an all-time high. Then the ORR is happening with a good rejection, with a strong rejection. It could be one of the potential swing high, right? So one of the places where you can think about initiating a positional short when you are seeing these kinds of patterns. Otherwise, if it's happening anywhere intermediate, or if it is happening anywhere the point of control is not shifting, those ORRs we call that as a weak ORR, right? And we also call if at all the ORR is coming with a very strong volume, again we consider that as a strong ORR. So when the ORR is happening, the first thing we'll be measuring is what is the first 1 hour volume, and the other thing we'll be measuring is that at what level, at what place it is coming in, whether it's coming at a major swing high or a major swing low, where it is exactly coming there. Accordingly, we interpret whether it is a strong ORR or a weak ORR. Are we clear? Any questions on ORR?
It's clear.
Yeah. So again, getting out of the whiteboard. So again, this category is termed as a weak ORR because it's coming intermediate of the trend, because already there are a lot many activities happen in the zones. Again, this is happening. This ORR is not happening at a major swing high. It's not happening at a 3-month high or a 6-month high, or even not even 2-month high. So that ORR is also not dominated with a bigger volume. So that ORR means it's initiated by the short. It is initiated by some other weaker players. And in fact, if you look closer in this particular day, you might find a lot of gaps in between the profile. Those gaps, we call that as an anomalies. Those gaps are called as what? Anomalies. Those anomalies are signs of short-term players shorting these markets. And they're going to see 3 or 4 or 5 anomalies you're going to see in that particular day. That is a kind of, and we call that structure as a poor structure. A poor structure always has the odds of clearing back. Right? So typical poor structure you can find in Bank Nifty also. So it's tough to continue when these kinds of market is falling up with this kind of poor structures. Like for example, you look into the Bank Nifty. So for the current swing low, look at the 19th February. On 19th February, if you look into that, there was one such anomaly, second anomalies, third anomalies, fourth anomaly, and the fifth anomaly, right? So there are a lot many anomalies. The total 5 anomalies are there. All are signs of a weaker hand selling. This is how weaker hand selling takes place. There are no single prints in between the profile. Along with that, you see that the structure is really poor. It's tough to continue short in their direction. Price ended where that particular day was, it was like this. Price went up and there was a huge fall lately, and that created what? A lot of anomalies in between the structures. It's very tough to play in their direction. Most likely, very higher odds that mean reversion is going to take place. So those are the plays you should be taking in contra trades over there. See that the very next day they close all the anomalies. Price goes and repair all those anomalies. Means a lot of trading activity will be happening in those zones. So they eventually they come and fill all those anomalies. All those anomalies are the result of the short-term players getting more and more emotional. When short-term players are getting more and more emotional, we'll be finding these kinds of weaker structures where the symmetry of the profile itself will not be the symmetry of the profile will not be very clear. You'll be finding a lot of gaps in between the profile. Those gaps are the result of emotional participation from the short-term trading community. So it's tough to continue in the direction against them positionally. Usually they'll mean revert back in a day or two. They will come and clear all those anomaly reference levels. I'll call that as a poor structure. Yeah. So yeah.
Sorry about this one. This is about the tile which you were mentioning earlier, about buying tile and selling tile. Yeah. Single prints. If the single prints are formed in the initial first hour, that AB, do you still consider that as a excess, or do we not? The single tile, single print.
Yeah, it is an excess on that day, but you cannot forecast an excess. So because the market opened and it creates a tail, it looks like an excess, right? So means you have to allow the market to develop as a structure. Once the structure is getting developed, then you can say, like, end of the day you can say there's an excess. So it's like, but during live markets, can we anticipate an excess? Yeah, not sometimes we will anticipate, not every time. It again depends upon the context.
Okay, thank you.
Yeah. Like, let's say in this case, in this case, there are a lot of anomalies are there, and next day price opens here, and there was a drive. Yeah, there is all odds that price could go and clear the anomalies. In that case, yes, you can anticipate, or probably this drive could be a legitimate drive to go fade against all those anomalies. But if previous day's information was something different, I might not anticipate the similar way it had happened. Right. So, but one thing is very clear here. All the anomalies which are cleared happened over here. It's mostly because of an emotional players coming and playing the game. It's tough to go in the direction. Right? Even if you are shorting this market, one should think about positionally cutting down the positions or tightening your stop loss. Something one have to do that, or completely booking out. I would say that if I am seeing this information, first thing I'll do is I'll step away from the position. I'll step away from shorting the markets again. Maybe if I'm a so contrarian, next day I won't fear trading against all those anomalies. It's difficult to change the position, in the markets. You are taking a bearish opinion, and all in a sudden you have to cut because something is saying that it is risky. But eventually one have to learn to do that, because as a short-term trader, we have to quickly learn to change our opinions. Right? That's what you will be able to trade in every kind of upside also and downside also, which is not easy. And it's very complex. That's how markets are. Markets are always going to remain complex, right? My opinion is that you learn to deal with the complexity. Otherwise, we should not coming into the markets to look for an easier solution. Easier solution doesn't exist always. Whichever is the easier solution, it's easy to practice. If it is easy to practice, everyone should be making money by now. And that's how it doesn't happen in the markets. 90% of the time, 95% of the time, people lose, especially the short-term trading community, the players who are making money in a longer run, right? So I'm not talking about this month or next month. I'm talking about a longer run for a 5 years period or 6 years period, doing this continuously. Very few people succeeds. If you want to be in that ladder, then you need to know to trade any kind of situation, and then you need to know what is really happening in the markets. If you know that this is, if you know that particular day it's vulnerable to hold your shots. Of course, definitely all the indicators will be pointing down when the market was crashing like hell, right? When the market was crashing like this faster, everyone will have a bearish opinion. Everyone who is having an indicator will be expecting a continuation. But looking into the amount of information which is generated, if you look into the amount of information generated, one would have been stepped away. Even if you would have charted with using your indicator, you would have been stepped away from continuing your shorts. Or probably, in a worst case, you would have been tighten your stop loss. In a worst case, you would have been booked partially something to take out of the markets.
Hello.
Yeah.
Regarding this anomalies,
Yes.
The position matters. Suppose if it's at the end of a trend.
If it's an end of the trend,
Or
no,
maybe
it can
maybe
occur.
after.
It can occur anywhere. Even if it is coming intermediate, also it can occur anywhere. So now what we have done is that even some of the poor structure, we consider some of the poor structure may not clear. Those poor structure will be looking like this. It comes in the form of a single prints. In between, you'll be finding a single print here. Of course, in this case, the single prints are not there. So there are nowhere you can find a single prints. If it is coming with a single print, it becomes a double distribution. In that case, it may not clear at all. But I'm talking about the single, without single print, if you're having a poor structure, it has every legitimate reason to fade it. And that fading, those opportunity, market will always provide that kind of opportunity to fade towards those weaker hand players.
So in your experience, usually this happens at the end of a trend?
No, it can happen anywhere.
Okay.
It can happen anywhere, and it provides you odds to fade those structures. Or at least, let's say I'm shorting this market. I find that there are a lot of poor structures there. Then what I'll do is that I'll go and quickly hedge my positions. So
Okay.
that is one way you can protect yourself. Maybe you might temporarily expect this kind of things to happen, but again, you want to revisit whether you want to continue the shorts or not. Again, so in that case, you can hedge yourself. You can do some active adjustment, and again, you can resume your shorts again by removal of the hedge. You can do some active adjustment by doing so. It depends upon what your entire view is. You are still seeing that Bank Nifty is going to crash. Then in that case, you can you initiate already. You might be initiating a trade. So let's say you initiate a trade over here, and now you are seeing this action. And one of the day you are seeing this this kind of a poor structure. What you can do is that when the day closes, you see that that particular day is closing with a lot of anomalies. You can hedge with some at the money calls or so. You can hedge it, and then you can carry forward your short still. No matter what, even if market is going to completely move against you, you would have been completely protected from that kind of movements. Right. So one of the places where you can actually able to handle even without a stop loss, you can go and manage the position without hedges. Not every trades in my trades have a stop loss. Some of them are kind of hedge trades also. Some of the cases if we think positionally it is bearish, but intraday there is a possibility that market could move. Then we can go and hedge the position, or we book out partially, or we book out completely, and again we'll look for a re-entry again. And okay, coming back to the point, we are talking about ORR, right? So again, next thing is the open auction inside the range. It's one of the dull, boring auction where price is open inside the range, it trades inside the range, and it balances inside the range. It's kind of a dull, boring auctions. So eventually, it will try to break the day low. Nothing much happens, and then they come back into the range. So really nothing will be happening for anyone. Throughout the day, you'll be seeing that around 10 o'clock, you'll see price will be turning inside the range and it starts forming ABCD. And around 11 o'clock or 12 o'clock, you'll be seeing ABCD, EF. More the time price will be spent, and middle of the day, they might try to break the day low, and then they got back into the range. This is what typically you will be seeing. Most of the open auction inside the range is like the price will be balancing inside the previous day's range. Previous day's high and low range, price balances. And as an intraday trader, right, I'll be waiting for the day to break. What I'll be mostly doing is that that ABCD will be forming over here. It will be dull, boring. Maybe around 1 o'clock or so, there will be a price break. It comes really fast. It comes really fast, and that is why we'll be getting some sort of a momentum auction reversal or so. The day low, at the day low, you'll be getting some sort of a momentum auction reversal or delta divergence at the day's low. Then price eventually go back to the point of control. These kinds of setups you will find very often. Those kinds of days, only an intraday trader can take control over there. That kind of opportunity will be mostly coming around 1 o'clock or 1:30 or 2 o'clock. And until then, one have to be really waiting patiently for the market to do something. Market will be definitely doing something. It will keep on giving opportunities around 1 o'clock or 2 o'clock. But as a trader, when you have started seeing price started balancing inside, and really the volumes are really low, and if you see in the Nifty lot size will be like 400 lots, 500 lots, 700 lots, 750 lots will be getting transacted every 5-minute low. Really, there is no opportunity to play when that kind of volumes are coming in. Lately, what happens? Lately, the price will be it will be balancing initially with very, very low volume, and then lately price comes up. It picks up volume. It picks up volume. It picks with a very, very big volume. The volatility and the volatility of the candle when it is breaking the previous day low will be very high. The volumes will be very high, but it turns eventually into some form of a momentum auction reversal or some form of a delta divergence by putting one more bar where the delta divergence, the delta becomes positive in your order flow, and then you have all the odds to mean towards the initially VWAP, and other cases towards the point of control, because point of control acts like a magnet. Right, so most of that kind of open auction inside the range can be easily played using the order flow tool just by waiting till the middle of the day, somewhere around E period or FGHI period. The break could come either on the upper side or on the downside, we don't know. But whichever the day happens, from the order flow, we'll be able to time it out really well. If at all they are going to trick at the day high or at the day low, I mean, when I say day high or day low, I mean in this case, I'm meaning previous day high or previous day low. One can able to easily time out from the at the previous day high or at the previous day's low break. How it is breaking, using this context, one can able to easily make out some real good price action movement. You'll be literally waiting for the opportunity to occur. Definitely, if you try to catch up with any indicators, it's not possible. Yeah, some indicators like stochastic, sometimes they might be lucky. But yes, it doesn't happen every time. But with order flow, you can be able to nail it, those kinds of trading opportunities. Right. So again, next comes the open auction outside the range. It is one of the toughest game to play because yesterday's market will be bullish. So you can see even in fact it forms a V-shaped profile also. It forms a P-shaped profile. So when it forms a P-shaped profile, that profile distribution balance will act like a support. The next day, what happens? Price opens gap up, and it establishes a range. Price opens. In this case, price was literally opening a gap up over here. If it's a good buying, what happens? The first half an hour will be the low, and the remainder of the day will keep going up. Instead, after opening the gap up, after establishing the first half an hour low, this is A period. Assume that this is a period range. If it's a good buying activity, they will break, and then the first half an hour will be the day's low, and the remainder of the day they keep moving up. But in that case, if they come in letter B or letter C or some other letter, it's going to get broken. It has every odds of turning into a completely balancing mode. You can easily say by around 10 o'clock or 10:30, we'll say that the remainder of the day, this day is going to be a dull, boring day. Probably stop trading or look into some other charts. So Most of the time it'll be kind of a dull, boring. Maybe lately after 2:45 or 3 o'clock, you can expect some spike or so. Lately, last 45 minutes, some action will be there, or it may not be there mostly. So in that case, if you see that price opens gap up and first half an hour low has been taken down, you can come to the market around 2:30 and try to take a decision whether to take a long or short by looking into the context. Mostly it will be dull, boring movements. Open auction outside the range are difficult to play as an intraday. So most of the opportunities may or may not come after 2:30. So both the open auction inside the range and both the open auction outside the range are very low opportunity from a positional trading perspective. But from an intraday trading perspective, open auction inside the range gives opportunity on how to learn to wait. At the open, the opportunity is not there. Even if there is an opportunity, price was falling in your favor, you have to book out because it could be an open auction inside the range. Price can always mean revert back towards the point of control. And open auction outside the range, price opens gap up and the more activity happens above the gap, but it will be still a dull, boring, balanced auction where very rarely opportunities come after 2:30 or 2:45. It can turn into a spike, or even it can turn into a good, nice late 45-minute price action. But until then, it will be a dull, boring price action. The key to identify is that price opens gap up, but first half an hour low broken at B period or a C period, it eventually turns out into a dull, boring auction day. Right? So many times you call it as a dull, boring auction day, it will. Yeah, so those are the 4 different open types. And now we have a very classified open type. We call that in the form of market confidence. Right. So if you want to learn market confidence, what I can suggest you is that we had done a webinar on market profile. You can always go and refer in a very comprehensive manner. The recordings have been provided to all the participants. So the recent webinar which we have done, it covers almost some 63 hours of webinar. Right. So the record Trader 2.0 Discover Your Trading Edge. The entire access is available to all the participants. The only thing is that you cannot ask live questions. And if you want to ask live questions, you can consider joining next Tradezilla sessions. What one have access to all the materials which is discussed over here, right? So, so this covers. You have to access using your credentials. Some of them we also combined in real time. How to combine order flow with market profile. And some of the readings from market profile, some of them are live commentaries, some of them are recorded information. So here we started right from the scratch, right? So we started right from the scratch, and then we moved on talking about patterns in market profile. 35 intraday patterns has been discussed in this setups. And the 15 top setups has been discussed, right? So each and every video run for almost 3 hours, and that alone closely comes around 30 hours of videos. And again here you will get access to. We discussed about order flow as well. Order flow is also discussed. And again, some of them are live daily market commentary. Right? So after up to part 12, I think. Total part 12. So that means here we also discussed order flow as well. Part 9, part 10, part 11, all the theoretical sessions. All these are theoretical sessions. Okay. And after this, after part 12, that means 12 into 13, 36 hours of education. We only, what you've seen is just a tip of the iceberg, right? And that is total 13, I believe, then total 13, okay, 14, 15, okay, 15. Yeah, 15 into closely some 3 hours. Some of the session even went for 4 hours. So then all these are live training sessions which we done in during the month of 17. Some of the sessions where we discuss about the S-Bank top. We also discussed about ICICI making a 10% rally, why it should make a 10% rally, how to catch those rallies. Even though you know that there is an AB power high, how to capture it, how long one should wait, so those kinds of setups has been discussed there, and each and every day this runs for almost, every day it runs for almost 1 hour of daily market commentary. Right, so 1.5 hours here, and again the second day it is again another almost some 75 minutes. Again another 1.5 hours. Every day we doing live market, we spend closely 1 to 1.5 hours each and every day. And we closely spend for almost 20 trading days, because it's market profile and order flow is such a vast subject. Don't try to learn it from day one alone. Don't try to go and implement from the day one alone. Yeah, some of the patterns like MR, R delta long, or momentum auction reversals, trap buyer, trap sellers, we can implement right from the day one alone. But to study the order flow, to get an expertise in the order flow, to learn to know what is the reason behind the order flow, you have to take a daily effort. Once the market is over, just go back and check the charts and try to interpret, because most of your decisions has to be taken during live markets. It is not like a triangle breakout, so tomorrow you go long. We don't pre-decide anything over here. Yeah, at times we can pre-decide, we can anticipate what could happen beforehand. You can anticipate, but not every time. Every time, even though you know that this is going to happen, there are times it's going to be a very difficult. It's not immediately go in your favor. Market always doesn't do that, right? So by practice, you'll be able to adapt to the flexible situation. It's a highly dynamic rules. What are the rules? I believe now what we discussed are so dynamic rules. Probably what you learned in the textbooks or whatever taught to the people in the first 1 year or 2 year or 4 year, 5 years of expertise, they'll be looking for very simple entry rules, exit rules, right? So that's what most of the people like also. Even the people who are coming initially to my sessions, they love to hear a lot about, tell me one strategy, I want to enter here, I want to exit here, or tell me where the support or resistance. Market is not that simple. If it is not that simple, right, I will not be running any of my training sessions. I'm doing my mentoring sessions only to understand myself much better and better and better. Right? So by teaching people, I learned things. We learned many things by talking to the peoples. Right? So I'm not the only one now. I'm monitoring now. We have a community. Most of the community players, they actively involve. It's just not only me. Right? So we actively talk to the participants. We actively discuss about markets, and we ourselves learn better from the community. Right? So the core thing is that don't try to learn market profile from the day one. Don't try to make profit from the day one. Try to keep your observations. Try to keep your expectations low. That is where you are going to learn much better compared to any other traders. Try to you will be better position yourself to compete with any kind of players. Let it be institutions, let it be weaker hand players. At least you will be able to compare yourself at where most of your trade locations would have been done. So most of the times your trade locations would have been done at the wrong places. Even though your views are correct, you are not able to play that because of your trade locations. What market profile and order flow could help you is to make your trade locations better. Even at one or few times you may go wrong, but you will be able to manage your positions with some sort of an hedges by doing some active money management techniques. That is what one can learn from the order flow, right? Order flow, we can time it. Yes, there are strategies we are still exploring. There are many strategies we are exploring. And market profile, we are in a position now to say that we learned something really good to take a dive in any kind of market situations. Yeah, order flow, like a baby, I'm also learning. To some extent, I would say that we had some view about order flow, and probably it's okay to run day-to-day operations. But I'll not claim that I'm a master in the order flow or an expertise in the order flow. But I can say to market profile, to a greater extent that I had practiced really well. Hardly, I took at least 12 to 14, 15 hours to think about market profile, to see the market profile during live markets. Day in, day out, my last 5 years has been went into a significant amount of energy I had dedicated to market profile. Like previously, I'm more of an algo trader or a kind of systematic trader, where I build systems, like I build indicators to trade those things systematically. So I write when to buy, when to sell, when to short, when to cover, and we simply follow it. I initially approached market profile only to automate. Is there a way where I can automate it? But quickly learned that it is not an indicator. It is a one tool where we can visualize how the participants are playing. It takes a long time initially, just like every other trader. I also tried, what if I buy above the value area high? What if the value area is started building higher? Should I have to enter long? It is not like that. Many people approach it that way. 99% of the people, they approach that way, including many of the experts in market profile. But truly, I learned from the master, Jim Dalton. Most of my core principles are from the Jim Dalton. And we closely spent 3 days with Jim Dalton to understand how to approach market profile. Previously, I have a different understanding. There are many things I left. I think I left sometimes like the stop hunting. I missed sometimes like an inventory, the market confidence. There are many elements we started missing in. So it's a piece of puzzle. So if you really want to know what is happening inside the market as a core, right? So thereby taking advantage of those traders' behavior information, then you have to see the information differently. Probably what I given you is a glimpse. So you can go through the webinar. So it closely matches with our top trading setups, and it gives you a greater idea. Probably it opens up a lot of avenues in thinking about strategies, right? And those strategies are highly dynamic. You can only learn to play. There are certain opportunities you can predict the market top. It is a market top, right? There are certain places you say that this will happen at a very great accuracy. When an entire market is crashing, you'll be able to say that, boss, all these looking like a short-term trading community, we have to trade against them. And initially, to believe that, you need to have a practice to believe all those information, right? So because there are a lot of information we discussed, it's tough to digest in 1 day or 2 day of webinar. Slowly one have to learn to know what is an AB power law. So next time you are seeing that, then how it is coming and clearing those AB power law. When I say prominent point of control, there is a mechanical touch at those prominent point of control and pricing dropping down. It is a short-term player. Why I am saying that it's a short-term player? Why I'm saying that this particular day is controlled by intraday players? Why I'm saying that stop loss is above that level? To come and understanding those levels, to practice those things, it's going to take a lot of time. And yes, definitely, one can make it. One can, if someone is putting in enough effort to understand those things, or willingness to commit yourself to understand those things, one will be able to take this as an I could say like a lifetime sustainable money making tool, right? So where no matter what, how much ever market is going to get complex, one can use these kinds of frameworks to build a solid, sustainable career in the markets, right? So if you have any questions, we can take questions. Otherwise, tomorrow 10 o'clock to 11 o'clock, I think 9:30 to 10:30, right? So 9:30 to 10:30, we'll meet during live market hours. During live market hours, we'll discuss many things about market profile and order flow. So how one should approach seeing the market profile. So far, we would have discussed some of the practical sessions. I mean, some of the theory part. But now in the live markets, whatever we practiced, we will try to apply the same thing during live markets. Yeah, some of the things. If something is new happening, which is always part of my rule, I'll always go and say like, this is what happening. Possibly this is what we can anticipate with a greater odds. Or probably market could do some sort of a dull boringness, or market could do some second half. There could be a stop hunting, or probably market has been topped out or bottomed out, or day high has been down, day low could be done. If I don't know anything, I'll say like I don't know. That I'll openly claim it out, right? They are not hidden secrets, but it's difficult to practice. But yes, one can always practice.
Hello,
Yeah.
Mr.
Yes.
Rajendra?
Yeah.
Yeah, sir, before winding up, could you please show once again the setup, data series and indicators both for Nifty or Bank Nifty?
For market profile or order flow?
Yeah, for market profile.
For market profile, let's say I'll do the same thing again. So open. Which one you want, Ultimate or
No, my Bell TPO Pro.
Bell TPO Pro. Okay, so I'll say like End of February in my case. Probably if you're using True Data or global data feeds, your symbol will be
global data feeds.
So Nifty_1.
Okay. Okay.
Right. So anyways, I'll try to show you tomorrow with global data feeds. I have one more mission tomorrow.
Okay. Okay.
I'll show it in that mission that how to set up with global data feeds. So it's more or less it's the same thing, right? So
okay.
Once you probably in global data feeds, all the symbols will be available by default. All you have to do is select the symbol and press OK. And then right click, go to the indicators. So you said Bell TPO Pro, right? So Market Profile Pro. So
okay.
Market Profile Pro, the TPO size make it as 20.
Okay.
20 means 20 multiplied by 0.05, that is 1 point TPO.
Okay.
And probably if you want that volume profile numbers, you have to. So if you apply, I'll show you what will happen. Right, straight away I'm applying. You'll be getting something like this, and you'll be getting the volume profile and the price-based profile. But the only thing is that you will not get any automated reference levels. But still, you can always go and count as a beginner. You can go and count each and every day that how many TPOs are there. So if so A, B, C, D, F, G, H, I, J, K, L, M. So it is a prominent point of control. What you can do here is that you can keep a line saying that the lines, horizontal line. If you memorize, always press F6 to get that line. And again place a text. So that is why we done initially for almost 3-4 years. We done this.
Okay.
So if you watch my old videos, we would have been plotting the reference lines every day. Now we don't, right? So I'll say like prominent point of control, and my old videos are even more boring because most of the time we'll be plotting those reference levels. So apply, and so we'll be drawing a reference line wherever the point of control was there. So sometime back, there is one more prominent point of control. So Control C and Control V, you'll be able to do a copy paste. Again, select this one, Control C, Control V. It forms one more level. So we'll be drawing a prominent point of control levels. And it is kind of a boring way, but yes, you learn a lot without reference line. You will be learning a lot as a beginner. But as an expert, I don't want to do this repeatedly every day. Because one time you close the charts, again you have to repeat the same thing again and again. But still, always while you're closing the NinjaTrader, right? So always close from the control center. You close it, it'll ask whether you want to save. Then all the charts will be getting saved.
Okay, yes to all.
Yeah, yes to all. Yeah. Or if you try to close the charts, you cannot recover back.
Okay.
Or you can also create a workspace. So workspace and then save all your studies there. So I'll say like save as, give a name like my favorite workspace. Then no matter what, even if 10 charts are open, you mistakenly close the charts, you always close NinjaTrader and reopen and open the workspace. It opens all your favorite charts.
Sir, I followed.
Thank you so much.
I saved in workspace, but still after closing by mistake, I'm not able to open that.
Then probably your workspace also would have been saved. While closing NinjaTrader, it would have asked whether you want to save the workspace or not. If you pressed yes, then automatically your charts got saved. Workspace also would have been saved. In that case, we cannot recover back. In that case, you have to redo the workspace. Right. So don't. Maybe that is NinjaTrader 7 or 8.
It's 8.
8. Okay. So I think probably you would have saved the workspace also. So when you go to the workspace, it asks whether you want to save or not. Maybe by you would have been given yes, or while closing it would have asked whether you want to save the workspace. In that case, if you given yes, then your recent workspace would have been saved. If you would have given no, always you can retrieve those things from the workspace.
Sometimes what happens is out of mind, I will close the charts directly from here.
Yes. So in that case, you would have given a yes for the workspace also. Probably that is the reason why the problem is happening. And now in this case, you can always draw the reference line like this and say that it's an AB poor low. It's good. Your learning improves a lot. Now we are in a stage of not doing all these things. But as a beginner, you should be learning to do all this stuff and keep a track record of it. You can always take a screenshot by pressing Alt S. It takes a screenshot. along with the time it takes a screenshot. You can save it, and even you can come and post in the reference line saying that, hey, this is my reference for the next trading day. So most of the time I'll be drawing everything, and I'll be putting my comments over here. Let's say here there is one more prominent point of control, right? So there is one more prominent point of control. So one more prominent point of control. Prominent. Apply. And there is one more level of point. There was a spike page. Now that has been completely removed. So we have a prominent point of control, AB power low, and a prominent point of control, right? So do we have anything missed out? I don't think so. So here, this is the reference on how to monitor for Monday. So let me put in the Slack saying that key reference level. So I'll be mostly saying key reference level. But if you're already a market profile player, you know what I'm trying to say. We'll not be elaborately explaining unless you ask. I'll elaborately explain what does that levels means. What I am thinking, I'll be explaining that. But most likely when I say key reference levels, so you can see that these are short-term participants. I'm not going to write all the time that these are short-term players. You know, all those discussions will be happening only during live markets. Or if you ask me what I'm thinking about this profile, what do you think about this reference line, I'll be able to explain that there is an AB power low there, and there is a two prominent point of control there. It's quite a kind of a risky markets to take a long also, to take a short also. So somebody has to wait in those periods, right? So there are two prominent point of control is there. One is exactly at the point of control level it got initiated. So we are dealing with a lot of short-term buyer also, short-term seller also, so which doesn't happen all the time. But yes, in this case, if one of the side market moves, we have to take the counter side. That is how I prepared for tomorrow's session. Let's see how the market does. Market always does something interesting. Not every time market is going to do what you're thinking, but whatever the market is trying to do, you should be able to align towards the market direction, right? So let's see. Okay, so if at all you want to change the TPO size again, you can right click over the charts and go to indicators and go and set the different TPO size accordingly. Let's say you are going to plot, you don't want 20, but still you want to have a higher TPO size. Always use 60. I mean, some people use ATR based levels, which I don't. So they go and see these kinds of setups, right? So some people, most of the people use level 3 or 5 for, they'll be mostly using a bigger TPO size. But I don't. Yeah, any other questions?
Rajendra, we can the template or via email?
Templates, I think it's already there when you are installing those templates, right? The Bell TPO, they started supplying some couple of templates, I believe. You can get the templates from them.
Okay, even for crude and all these things, instruments, right?
Yes. For everything, they are providing the templates.
Oh, cool. Okay.
Yeah.
Thank you.
So when setting up into crude, when it comes to the MCX markets, there are a couple of things you have to understand about MCX markets. MCX crude, let's talk about crude here. Crude, they usually tracks the NYMEX crude, right? Indian market crude, they usually tracks NYMEX crude, right? So NYMEX crude has, so the settlement itself based upon NYMEX crude. So there they have two kinds of markets. One is an regular normal market session, which usually starts during US market starts, which usually follows the NYMEX timings. And after the regular market hours, they have something called overnight markets. Right? Overnight market means in our terms, it will be from 10 o'clock to 5 o'clock. I mean, 9 o'clock now it's 9 o'clock to 5 o'clock, where the volume will in the NYMEX crude itself very low, where the institutional presence will be very low, because institutions, they don't find that as an attractive place to find a liquidity. Who comes and plays is mostly retail hands come and play the game there, especially in overnight sessions. Most of the overnight sessions are dominated by the trading community. Long-term players, they don't like to play in the overnight markets, and they don't play because they don't find the liquidity there. Especially the institutions, they don't find the liquidity there. Institution presence will be very, very less in the overnight sessions and more in the regular market hours. So if you match NYMEX crude, you have to separate into two different profiles. One is from 10 to 5 o'clock, another one from 5 o'clock to the remainder of the day. We'll consider as two profiles, right? So overnight profiles, we don't take any reference. We don't take any much of information over there because the participation itself very less, and we always use a regular profile. For example, I'll show you. I can show you the way I set for US markets because I have access to the US markets here. I can show you for US markets how I will be doing for US markets, right? So US markets, there is a product called ES Mini. ES Mini is like Nifty. We have Nifty. They have ES Mini S&P futures. First, I have to connect to the data feed. I'm going to do one thing. I'm going to close everything here. I'll go to the control center. I'll connect to Kinetic. Once it got connected, I'll go to the chart. I'll open ES Mini, right? So this is US markets, and you press OK, you'll be getting data for both the regular market as well as overnight markets. So they have one more layer of complexity when dealing with market profile or when dealing with order flow. And now right click, I'll go to templates. I think I have a template ready with me. Enter the name ES Mini. Okay, if not, I'll do one here. So I'll right click and I'll go to indicators. And first of all, I'll select Bell TPO Ultimate. Anyways, it doesn't matter which I'm selecting. I'll select Ultimate over here. And what I had done here is that we'll be using one tick. Each and every tick is 0.25 there. So we'll be using a TPO size of 1 tick. And so first of all, you need to have a good knowledge about what is the tick size is being used. If you don't know, you always go to instrument name and you can go and check the TPO tick size. And then the other setting what I'll be using is we'll be removing this profile volume. You apply the daily profile. What you will be getting here is that you will be getting a profile for both overnight markets and regular markets combined, which is not the right way. See that your profile is a little bit skewed because it's included both regular market as well as the overnight session. So what you can do is that you can do right click, go to data series. Instead of selecting the trading hours, select your trading hours only to CME. It's under CME Globex futures. CME Globex futures. Globex index futures and apply. So now you will be getting only regular profile markets. The overnight markets would have been completely avoided. And you see that there was an AB poor low here some time back. Price went up with an AB poor low, and that got completely cleared down, right? So, and again, there was now if you look pretty closely what happening in the US market, there was a prominent point of control. There was a poor low, means short-term players last 2 days, they are initiating longs over there. So far, the activity is good and come back. Not much of weakness yet. There is one more AB poor low there. Is it? Maybe I'm using a wrong. Maybe it's US market stock index futures. It's regular. RTH means regular trading hours. ETH means extended trading hours, right? So I'll use CME US index futures. It's all the sessions are regular market hour session. Means right from 8:30, it will run till 3:30 there. So other markets, it just avoids it. We will be looking into what the overnight is doing. So we'll be taking also reference level from overnight high and overnight low. And of course, the same rules are applicable over here. The same participation, same dual point of control, or the G2 level, G3 level, or failed auction. Everything is applicable the same way. We are trading the information here. And as of now, there are no immediate weakness is coming from the US markets. There are no place saying that it is a weaker auction. You can see, in fact, they got one more P-shaped profile there. They got a P-shaped profile there. And one of the day, they tried to break down the P-shaped profile. They got back in and they got back up. So that is how they do. Most of the B-shape, a good P-shaped profile, it will be defended like this. Either they will be doing an they find a lot of liquidity below that level. So more the time price spends above this level, then they will take it up.
Sir, what is G2 and G3 high and low, sir?
One of my favorite short covering patterns. Why a short covering could happen, right? So to explain that,
Yes, sir.
So think about this. It's a kind of one form of a confusion price action. To explain this particular day, look into 21st February. 21st February, what happened is that the IB, the initial balance, I mean, not initial balance, the letter A period high has been broken on the upper side.
Okay, sir.
And it forms that particular day, it forms a higher high. So one thing is that letter A has been broken on the upper side, it forms a higher high.
Yes, sir.
Higher high. Second day also, price opened somewhere on the downside. It forms a lower high. The second day also, letter A high has been broken. Second day also, similar case. Letter A has been broken.
Okay.
Letter A. This letter A has been broken, and it forms a lower high. At the same time, the second day is not an inside bar. It also broken the previous day's low. In these cases, we call that level as a G2 high, which has the higher odds of coming in revisiting in next T+2 days. Most likely
next 2 days, sir. In 2 days, it will come back.
Yeah, mostly 70% of the time it go and revisit back. But when I'm doing so, right, I'll be also taking assistance from the bell trend analyzer. So let's take a bell trend analyzer also. The same case, I'll take ES mini. And I'll go to daily. So daily chart, on the daily chart, I'll also put the trading hours. Okay, it doesn't matter what trading hours is. And I'll go and add trend analyzer. Just give me a second. Yeah. So trend analyzer. And so when G2 high is forming, not every G2 high we go and trade. We go and trade along with on the daily time frame. What was the sentiment? We have a quick look. If the sentiment is positive, then we go and attempt. Or if the sentiment is still negative, next day open, we expect the sentiment to turn positive. Then at the opening itself, next day the sentiment is holding positive. Then we go and attempt saying that that particular day G2 high would have been happened over here. I think I have to apply only for S&P. So maybe I'll show you, because that includes both regular market hours and overnight hours. You can always avoid overnight hours by looking into the indices. TradingView.com. SPX. It's instead better to apply on the index. So here is SPX here. Go to daily chart. Daily. So I have a similar set of indicators over here. Indicators. So in this case, it would have been turned negative. I don't know when it turned negative. But if the opening of the bar, if it is holding positive, right, then in that case, we'll go and attempt towards that G2 high. So usually those kind of G2 high will be taken out in the form of a short covering rallies. So otherwise, there is not much of weaker activity we can see at this point of time. No anomalies. Price is going smoothly up. Not much of weaker levels, I would say that there is a one poor low, and in fact, this is kind of an AB poor low. See this information? It is a poor low, and it's also kind of an AB poor low. Maybe if at all any revert back, we can go and test this. It is not an AB poor low, but the letter AB poor low, only one tick price went up. This is which I'm seeing it for the very first time. Probably we can consider this as a kind of still a poor low which can be cleared faster, kind of an AB poor low, right? So it is kind of an AB poor low which needs to be looked on the downside if there is any. Otherwise, not much of a serious downside reference or serious upside reference so far. All the auctions went nice and clean. Not much. So if at all any major bearishness has to come, this P-shape profile has to be broken. So this P-shape profile has to be broken for any positional trades. Right, so a P-shape profile has to be broken. Even a one point of prominent point of control can be left something like this. That's fine, right? So, but if it is coming in a stretches, 2 prominent point of control in a row, 3 prominent point of control in a row, or a 4 prominent point of control in a row. So those are the signs of more and more short-term players coming and playing here. So here a mix of game is happening. It is not just only short-term players. Short-term players played this game, but see there is an open drive, and it also forms a P-shaped structure. Fresh money started flowing in. Fresh money, every time the price comes into the P-shaped profile, it got completely an absorption happened, accumulation happened over there. Again, now price is going up with some short-term trading activity. And again, now there was a poor low, and there is a prominent point of control. Some short-term players are playing the game now. The entire balance here, this entire balance over here, the entire balance over here is completely dominated by the short-term community. So you see that this is a prominent point of control. There was a poor high, the short-term sellers were there. And again, there was a next day was a prominent point of control, and there was a poor low, and there was a prominent point of control. This entire band is played by the short-term players. When the entire band is played by the short-term player, what typically happens is that they might try to break, and they got back into the range. So it's a kind of a look above the balance and fail, we'll call it. So usually they go to the other side of the balance. Or typically, if at all these kinds of balance has to be broken out, they usually have to broken out in the form of a gap and then continue. Or they will do, again, they're going to trade in this range. More chances are there they're going to go down rather than going up. Right? And at times what happens, they break lower, no serious buyers, again they come back and they go back again. So these kinds of balance will give you activity, because the entire balance is filled with short-term players. The entire activity is filled by short-term players. Mostly I'll be looking for an activity above this and coming back in one of the places where one can think about shorts to short here, and maybe in the worst case think about that AB poor low which was there. So here is the one form of AB poor low, right? It is not AB poor low, but it is very close to the AB poor low. It's pretty close to the AB poor low, right? So if I expand, I can see. So maybe Monday in US markets, if at all spike, and then one can anticipate this kind of auction always. Or if there is if at all they open, if there are serious buyers up there, what they will do is that they open up gap up mostly if there are serious buyers, and they took a drive and they mostly build a point of control there, and then the remainder of the day they might continue. But if they are not serious players, mostly price will be opening over here. That we try to break the balance, because since the balance is completely dominated by the short-term players, price coming down below most of the short-term players will try to anticipate a profit booking kind of stuff. Always they try to move to the nearest available possible places, right? So, and that is what one can anticipate in a very short term. Now, giving the context here. So we will be thinking realistic. We will not be thinking about, hey, S&P is going to crash some 10% or 20%, unless there are some sort of an odds there. And when you know that you are wrong, you'll be able to quickly change your mindset, saying that, okay, that kind of crash may not happen. Probably I have to rethink differently, right? So like a GPS, even if you are going wrong for quite some time, you'll be able to reroute yourself, and you know that you're going wrong, and probably you'll be able to readjust towards what the market itself trying to do. Always you will have a view, always you will be having a bias, but something is going wrong in your view, always you'll be able to change the sides with a quicker mindset. As a short-term trader, you'll be flexible enough to change your mindset accordingly what the market itself trying to do, rather than what you want the market to do. Right? Yeah. So any other questions?
So can you teach us a couple of strategies for swing trading?
I believe you please go and watch those videos. Some of the videos where we talked about closely 35 trading intraday strategy. One intraday trading strategy, we talked about 35 varieties. We talked about it.
Okay.
Even if you are able to master 4 to 5 strategies, which is always possible, if you are able to master 4 to 5 strategies, one that is much enough to build a successful career over.
Okay. Fine, sir.
Yeah.
This and again, I wanted to know this momentum strategy, how it is used with order flow.
Momentum strategies with order flow. You mean combining with market profile?
Yeah.
Or with
Yes.
So when you're talking about momentum trading with order flow, so first of all, always the context will be from the market profile, right? So there are places, how we can say here is that, think about this scenario. We're talking of momentum trading. There is something we call as a top-down analysis, which we will be using it to prepare for the day. For example, we'll be always starting with quarterly charts, and then we'll come down to monthly, weekly, daily. And finally, let's say we are in a daily time frame charts. On a daily scale, you might be finding this information. Let me remove all those drawing. Right, market always either in a trending mode or in a balancing mode. So you can see the market is completely balancing mode in this zone for quite some time. We've been balancing for how many time? Almost we've been balancing for more than 3 months now in the same band. We're continuing between 10,600 and 11,000 levels. Now, if you look from the profile perspective, even this entire drive was from the short-term player. Entire drive down was short-term player. Again, drive up was short-term player. This drive down was short-term player. Again, short-term player here. Even the recent correction is short-term player. The recent upside also, it is from the short-term player. So, but at the same time, you can also see that it is also one time framing here. So our price is making higher highs every other day. Price is continuously making higher high. Volume is on a decline. Right? Last couple of days, volume very low participation is happening over there. And mostly this low volume participation is mostly from the short-term players. No serious buyers are there, no serious sellers are there. It's a very difficult market situation what we are facing, because think about the investors. Last 3 months they are not getting anything. Of course, they are getting into small cap stocks or mid cap stocks. Mostly it is going down. No matter what, last 3 months it was going down, and even last year also it went down. Literally nothing is happening for the investors. For last almost 15 months has been passed. Nothing was happening for the small cap and the mid cap traders. So investors are in real frustration for the last 1.5 years. And think about the intermediate players also. So those who are holding for 3 months, 6 months. Last 3 months, nothing was there. Even nothing was there in the index stocks. Nothing was there in the mid cap, small caps. Really, the small cap, really the intermediate players who is having a holding period for last 3 months and 6 months are also in a real frustration. Then think about the short-term players. Only short-term players are enjoying this game, right? So this entire game is played by short-term players. Only short-term players are there at every time price. What is happening here is that the short-term players are initiating a position. They are going long to too long, and they are unwinding their position. And again, they are going long to too long, and they are unwinding the position. In fact, even they are going short to too short. Again, they are going to an extreme. Again, they are going to the extreme. Again, they are going to the extreme. They are unwinding the position. While they are unwinding the position, only short-term sellers are coming into the markets, and they are going up. Now they are going up with short-term players. This is the kind of behavior which was going on in these markets. When you know these kinds of markets, then you can able to prepare what to anticipate tomorrow. I mean, frankly speaking, I don't have any view for tomorrow. But if at all I'm seeing a bullish view from I'm expecting there is a G2 high, so I'm expecting a short covering. Then probably first thing I have to look from the order flow is that where the initiative drive is happening, right? So you can be the part of the initiative drive, or you can look for some sort of a delta positioning setup where there was initiative drive and you've seen some initiative drive and you've seen some delta positioning. So next time when the price is coming to an absorption, those are the places where you're seeing an absorption. There you can look for one more initiative drive there. So you can go and capture those. You can be the part of at those delta positioning zones, or you can go back and check where the delta positioning already happened on a 15-minute scale or 30-minute scale, so that you can position yourself when the price is coming and testing those locations. You can again go and position yourself at those places, right? So there we can go and take the momentum trading, or you can also check what if there is an open drive. If it is open drive, what happens? Price opens and the first half an hour there will be a drive, and of course in the order flow also you're going to see some initiative drive over there, and you can literally go and take the trade. Or if there is an open drive, definitely I'll think about initiating the trade towards the longs, right? If it is combining with delta positioning, we'll also combine with delta positioning. Or let's say there was an open drive which happened in the first half an hour, and all of a sudden I'm seeing a momentum action reversal. Even though I'm looking for a momentum, there was a momentum action reversal. So instead I'll cut off my position. Even I'll think about trading the shots also towards AB power low. So it's very dynamic. I would say that my preparations are very dynamic, and it mostly depends upon what is happening in the markets. Not every time market will give you a bigger trading opportunities. At times the trading opportunities are very small, and as a trader, as a full-time trader, at times you'll be able to take smaller opportunities. Yeah, very rarely bigger opportunities comes. When bigger opportunities are showing up, definitely you have to step in and take those bigger opportunities. But most of the times, markets are going to show you smaller opportunities, and I'm talking about Nifty and Bank Nifty perspective, right? So as a Nifty and Bank Nifty trader, most of the time your opportunities are only there by waiting in the markets. And those are the times where you're going to get some 1:1 or 1:2 or 1:3 risk reward games. Very rarely your risk reward goes to 1:10 or 1:50 or 1:100 kind of games. It comes, but to recognize those 1:5 or 1:10, 1:50 kind of games, you have to learn to think from the odd-based thinking perspective. Right? All those market profile will help you to think about from the odd-based perspective to capture those bigger moments. And that is not easy. That comes with a practice. And what you have to do tomorrow is that every day you are starting with market profile and order flow. Some of the old thinking we have to give up, right? Old thinking like this is my support, that is my resistance. What if I'm going to apply trailing stop loss? What if I'm going to mix ATR with this? What if I'm going to mix Bollinger Band with this? Rather than mixing indicators, you have to see market profile as how the players are participating. I know it is going to be challenging because many people, they don't want to give up their old style, right? So somewhere the transition has to happen very slowly and steadily. When I was more of a mathematical guy, I used to build systems. I used to automate my trades. It was initially challenging to give up my older thoughts. The older thoughts, it takes a long time to understand that my older thoughts are crap in the market. So some people have that weird understanding that Fibonacci is a support or resistance. Market doesn't care about where your Fibonacci level is. Probably it is easy to tell a story. It is easy to tell a story, but live markets, when the price is coming exactly to a Fibonacci number, to your exactly Fibonacci level, especially it is coming at a greater force, it's tough to take it's tough to take an view over there saying that this will be definitely my support or resistance. It's tough to say that, right? Because we don't know what is really happening in the markets. Markets all of a sudden it's shooting up. The moment people see the price, the more the people who are watching the price, more they are going to be react emotionally, even though their views are right. They cannot stick to their position because people who are watching price, they act very emotionally. Like many people, you would have seen many times, many traders would have been having their trading terminal. Some thousands of stocks in the watch list will be running. It will be flashing the reds and greens all the time, or the reds and blues. All of a sudden, BHEL crashes. They don't have a plan to short BHEL, but because of the stock is crashing, they'll be looking into the charts. They'll be doing some quick analysis, and they want to enter immediately. But when I'm taking any positions, whether let it be in Reliance or HDFC Bank, especially in stocks, I'll study the stocks for almost a month to understand what is happening, what kind of players is happening. Then what kind of odds it is being presented. Should I have to wait some more time or not? Then we'll take a trade. Probably my trades would have been done after 10 days or 11 days, after watching the charts, after studying the movements, after studying what are the odds are there, after a lot of waiting period. Then we look into the trades. That's why my trades in stocks are very less. But yes, I do trade stocks as well. But most of my trades are positioned in Nifty, Bank Nifty, because I'm regularly trading. I'm regularly watching Nifty, regularly watching Bank Nifty. I know what kind of players I'm competing every other day. But I don't know, all of a sudden, if you ask me, what is your view on Reliance? I don't have any view because I might not be monitored for the last 12 days.
Okay.
Right? So if you ask me all of a sudden, can you tell what could happen in Tata Steel? I don't know. First, to understand the market, I have to be synced with them. So I have to study the markets to understand the flows. Yes, by references, I'll know what is going to happen. But always, first you have to get a bird eye view by doing a top-down analysis. Which is already explained in that particular webinar. That TradeZilla 2.0, you can go and check how we had done the analysis, what we seen from the top-down analysis, and then we'll come to the market profile for the context, and then finally we look into the order flow to perfect your entry points, which is not easy, and this has to be a practice. Then only one can able to have a sustainable career in the markets. I'm telling you. When you are going to practice this, right? You yourself, you feel the difference in the next 2 months, and again another 6 months you'll be feeling a lot of difference. Still, trading will be easy. Even for me right now, trading is going to be easy. It's not easy, right? I'm just watching market profile for 5 years. There are almost 4.5 hours I've been spent enough time in order flow, watching the charts right from the start of the market till the end of the market, every day in, day out. But there are opportunities I'm able to spot on and I'm able to nail it. Still there are places where we are working on. Not every time the market is going to be easy for me. Right? There are places where I'm seeing a new information. Whenever you're finding a new information, it is difficult to digest in one time. Probably you have to take a lot of notes. Probably you have to memorize a lot of things. And then you have to go next time. Maybe you might see the opportunity some 3 months later or 6 months later. The same opportunity, similar opportunities. Those times will be pretty easy for you to handle it. Right? Not every market situations are going to be easier for me. But what we have done is that over a period of time, we acquired all those information. We call that as a screen time. Many full-time trader does that. Right? Like every other full-time trader, we also acquired all those information. Like what if my market done this? How the market reacted on a demonetization day? How the market reacted on an election day? After this Kashmir attack, when the Kashmir attack happened, how the market reacted. All those studies, right? You will be having a better opinion compared to any other players. Your opinion in the markets, your view will be getting improved more and more better. The more the screen time you're going to have, you don't need to listen to any of the experts, including me. Like you will be on your own, and that comes with the practice. It's okay initially to stick to the experts, not to trade along with them, not to take a view from them, but to understand how they are taking the view, how they are framing the view, why they are taking that kind of views, what makes them to go wrong, what makes them to be right most of the time. So that is the only thing as a beginner of a market profile and a beginner of an order flow, you have to think about it. Over a period of time, you will be seeing complex pattern. You will be cultivating your own framework. You will be able to think from your own risk management purpose, because there are many cases I'm okay to deal with an 100-point stop loss or even 150-point stop loss in Nifty. Many cases we go and manage, right? As a small trader, not everyone cannot go and manage the way I'm dealing with, because I'm a kind of a bit of a speculator. Even if there are 100 points movement against me, I'm willing to go and add to my position. That's how I'll manage my positions over there. Right? Many cases we will have a stop loss. Many cases we don't have a stop loss, but we will manage with the hedges. Many cases, even markets are in our favor, we don't hesitate to cut off our positions. We are okay to miss the opportunity. We know that there is a trading opportunity, but still we walk away from those. One of the fantastic juicy opportunity. Many cases, I also go wrong, but when I'm going wrong, I'll be keep a note of it, and then next time I'll make sure that I'll not be repeating those same mistakes again. And that is how it's a repeated learning. The only thing is that you will refine yourself over a period of time, and that journey will not be smooth, right? And over a period of time, yes, it will be smooth. And that is the reality, by the way. If you are looking for magical formulas, holy grails, I've seen enough in the last 13 years. I haven't found one. Probably if you have one, just inform me. I'm okay to park money on that.
People out there are teaching only holy grails, but nothing is there. I'm very happy to be associated with you and your forum. Thank you very much, sir.
Yeah.
Hello. One more thing.
Yes.
Regarding this NYMEX crude, if you want to track it on Bell TPO and Ninja Trader, where should we get the data?
Global data. I mean, what kind of data are you asking?
Means NYMEX crude, US crude.
NYMEX crude, you can approach eSignal or IQN feed, DT and IQN feeds.
Okay. Yeah. Okay. eSignal they are providing.
eSignal they are providing. DT and IQN feed they provide. CQG they provide.
Okay.
So there are many vendors you can, if you want to see what are the vendors they support, mostly international vendors who are associated with. So you go to connections, you go to configure. There are a lot of vendors over here. All these vendors provide mostly access to the. Some of them are brokers here, like the TD Ameritrade is a broker. Ninja Trade FXCM, they themselves are a broker. Ninja Trade Continuum is a broker. Again, FXCM is a forex broker. And Interactive Brokers is also a broker. Forex.com is a broker. So if you have a brokerage account with them and if you're doing some volumes there, you will be mostly getting free access to the Ninja Trader data feed. Otherwise, vendors like CQG, eSignal, IQ Feeds, so Rhythmic is also a broker. They also a vendor as well. So TD Ameritrade is also a broker. So if you have access to any of these vendors, then you can get from them. So again, bar chart, more or less, the pricing for crude will be coming around $140, I believe, per month. That's the data cost. 70 plus 70, I think 120 to $140 per month will be coming for USD in NYMEX crude.
NYMEX crude alone, or all instruments, all US international instruments?
Only for NYMEX crude alone, I'm talking. Only for NYMEX instruments.
Okay. NYMEX
instruments. They charge a hefty fee, $70 only for the exchange. Our exchange charges $10, whereas NYMEX crude charges closely NYMEX crude and the gold, right? So the gold futures for US markets, they also charge similar $90 or $70 per month.
Okay.
Yeah, so you cannot avoid the cost. Cost is quite huge there.
Okay. And regarding this Forex.com and FXCM, are they providing the
They are mostly forex brokers. If you have access with them, then you will get mostly mostly and free access to the forex markets.
No, but the data they are providing, it's a futures data or the CFD data they are providing?
I don't know. If you have a CFD account, then probably you will get me CFD account.
CFD, okay.
Yeah. So, but otherwise, the case like TD Ameritrade, where you might get access to CME futures, and Interactive Brokers, again, you will be get access to the futures data there. So yes, many futures you might be getting at free of cost if you're having access to Interactive Brokers, which you can open from. I think they have an office in Mumbai as well.
Okay.
Yeah.
Hello, is order flow strategies backtestable in an automated way in the current software?
No, as of now, it is. I think it is coded at an indicator level. It hasn't done as a strategy level. So
Okay.
you cannot backtest it because the coding complexity of the order flow itself goes for some 20,000 lines or so.
Okay, fine.
Yeah, as of now, it is not an automated software. Well, there are indications like MR alert, RD alert, whatever we done, it is sitting still at an indicator level. So you cannot backtest because it is not run as a strategy. Even if you want to backtest, right? The one of the problem is that the data which the vendors provide, the vendors like Global Data Feed and True Data, they provide only 2 to 3 days of tick data. So you need to accumulate more data to validate yourself. And the second thing is that if you are going to use eSignal, you can validate up to 15 days or 45 days. But I would say that still that is not enough if you want to build as a strategy. So these strategies, when we are talking about market profile or order flow, they are mostly forward-thinking models. What is a forward-thinking models? If you look into the patterns, the head and shoulder patterns or the divergence in the RSI, all these relies on the ex-ante model. That means you need past data to validate it, right? So here we are, it's more of a future thinking model where we are looking into how I can play this game better, right? It's more of a discretionary. It's up to your understanding whether you want to take it or not. But always the game is to understand whom we are competing with, what kind of behavior is going on. Should I have to wait for some more time, or if we always give more value to the sentiment data. So if the market is crashing because of global markets, then we have a particular way of style to handle the markets, right? So we'll be looking for certain patterns when the markets are in crisis, when there is a terrorist attack is happening there, all of a sudden. Whereas the head and shoulder pattern will not give more weightage to a terrorist attack. The head and shoulder pattern will not give weightage to an earning announcement. It is just a pattern, and you have a level, and it breaks. You are going to come and play the game, which is very much backtestable. Whereas when it comes to market profile, we give more weightage to the market emotions, market sentiment, why the market is crashed. So if you go and check every market profile trader, they also give more weightages to the weightages to the global markets, or they give weightages to any upcoming news is supposed to come, RBI announcements, because most of the events are where most of the market top has been, most of the market tops happens, right? So market need a reason to crash. Even if it is a good news, market will crash. But always some of the patterns, like if you look into the current top came on RBI announcement day, and if you look into the sometime back, the market crashed because of the US, the GDP numbers are 8.2%, and right from there we are crashing. It's a good news, but market made a top over there. Even the latest top, RBI cuts 25 basis point. It's a good news sentiment, but still market tend to crash, right? So as a market profile trader, we give more weightage to news based, especially the macro events. Which is happening, we'll give a little bit of weightage to that. And yeah, we don't trade the news. We don't trade RBI news because we don't go short because that will be the top, right? So, but most of the tops have correlations with events, and including the long-term capital gain. Sometime it was a top. Karnataka election, sometime back it was a top. So such kind of events will be more closely monitoring the markets, right? So we'll not be playing the Karnataka elections. BJP is going to lose, so we'll go short, or we will go long. We don't take that kind of conclusions, right? So when there is an event is happening, prior to that, if you see a lot of weaker players, a lot of short-term players are coming and playing the game, and there is an event is coming in. That is where you should be going and taking those events. That is why you can look positionally and bigger play over there. But if an event is getting created casually, there are no weaker play. Previously, there are only strong plays you had seen. Probably you may not take a bigger decisions over there. So where to take a bigger decision, where not to take a bigger decision? Yes, somewhere we'll be looking into the news factors, especially the macro factors. And let's say yesterday the US market was bearish and it went down 3% down. All in a sudden, you would have seen many times we opened 100 points gap down, and all in a sudden, our entire 100 points gap down will be recovered by end of the day. Right? So those kinds of places, how you can understand if there is a big gap down is happening, if it is because of the global market, is it a global market reaction? Then how to deal with that global market reactions, right? So how one can position themselves when there is a big gap down, and after that certain activities, how one can expect a short covering rally, how one can expect a short covering rally using market profile. That's the kind of analysis which you cannot backtest it. You can only prepare for those kind of setups, which we have seen enough number of times for the last 5 years, and we're still practicing and we are accumulating those new informations. Once we got a new information, we look into our rule book. If it's not in our rule book, we'll add it to our rule book. Right? It probably too simple to say that it's kind of a machine learning what we're doing. This is what machine learning does. Machine learning looks into the new information. It tries to always look into the old information. It tries to refine the old information. Or if there is no such information, it adds to the existing rule book as a new rules. And that's what we are doing over here, like a machine learning, like a GPS. We are always trying to understand what the new information is happening. If it is not in our rule book, we always add it to the rule book. If there is a chance we are seeing a new information, using that new information, if I am able to always refine my old strategies, I'll go back and I'll change my old strategies to make it as a better game. Right? So that is how that's how I've been doing it for the last 5 years, and we have now reached a stage where I can say that I can handle any kind of markets, any kind of instruments, and which is completely let it be bitcoins, let it be currencies, let it be US markets, let it be Japanese markets, or let it be Indian markets, let it be commodities. One can go and play the game, and all one need is a dedicated practice. Right? So thanks for your time.
Sir, last one question, sir. That RD alert is in RD alert, no, sir. RD long and short.
Yeah.
It's in RD alert add-on, sir.
Yeah, it's an R Delta alert add-on, or it is also part of order flow ultimate.
Oh. And this one, sir, in the Bell Delta is that MR long. That is in the Bell Delta, na?
MR long is also part of order flow ultimate. So now, initially they thought of building a new add-ons for every order flow tools. Now they thought like giving those kind of individual add-on for each and every time. It's going to make the tool costlier. So they thought of high-end package ultimate. You'll get everything in the ultimate edition.
In ultimate itself, everything will be coming, no, sir?
Yes. And the R Delta is what the old clients, many of the old clients would have been subscribed to R Delta.
So right now, so right now we get that ultimate itself will be enough. All the order flow.
All the order flow tools, any new tools which we are designing is also will be part of the ultimate. But to answer to the previous question, can I backtest? It is difficult to backtest because the rules are very dynamic, right? So it is not one rules we are dealing with at any given time. Tomorrow the rules I'm going to use, I may not be use it for another day. The trap teller which I'm using today, maybe tomorrow it could be some other rule, and the day after tomorrow it could be some other rule. So we have a block of rules, and we go with that process-driven rules. So we don't know when the rules we are going to hit in the markets. Whenever that rule we are hitting in the markets, we go and play those rules. The only thing is that prior to the markets, we can only prepare for a certain set of anticipation.
And regarding this MR long, you mentioned about order flow ultimate.
Yes.
But if we see the Bell TPO's website, only order flow is mentioned. No order flow.
Yes. So this MR long, after observation, I think they given to me only 2 days back, the alerts. Right. Until then, we are watching manually. So probably the next, I think by Wednesday, they are going to launch this MR alert.
Oh, it's not yet launched.
Yes. Probably by Wednesday. Right now, it is only access to, at the mentor level, the access is there. All the mentors are testing. And once the testing is done, it will be rolled out to all the clients. By mostly, I think by Wednesday, it will be done.
Okay.
So the trial also, sir, can we get the trial after when they launch the Wednesday? We can get a trial for that, sir.
Then please check with Bell TPO people.
Okay, sir.
And
we give a lot of inputs to the Bell TPO people. If I find that something we can automate it, like so, we give the requirements to them and they automate for us.
Okay.
And, so we don't mostly look into their business.
Okay, sir. Thank you.
Okay, one more thing. If we join the Traders Cafe, will it quicken our learning process, sir?
Yeah, definitely. Yeah,
definitely. Okay.
You have to come down to Bangalore. Are you from Bangalore?
Okay. No, I am from Kerala, but I'm thinking about because I think individually it's a little difficult to get from the race group. So I'm planning.
Yeah, if you are seriously looking for some serious learning, then always our Traders Cafe serious learning happens over there. It's not just we, so there are a group of 5 traders, 6 traders. We always talk about markets and we always talk about patterns over there.
Okay.
Yeah.
Okay.
So I think it's high time to take a break here. We'll break now and then we'll rejoin tomorrow by 9:30 in the morning, right?
Okay.
And tomorrow probably I'll be teaching you how to do a top-down analysis. Probably some 10-15 minutes we'll be spending over there to do a quick top-down analysis, and then doing live markets we'll focus on what the market is doing. So if there is any opportunity there, I will say that, but most of the time will be mostly learning happens over there in most of my live market commentary. Learning happens there. So you keep your expectation low and come to the markets. If there are anything surprising, definitely I'll show you if there's anything surprising there. Otherwise, most of the time, market will not show you opportunity at the opening itself, right? So 9 to 10:30, I think probably it's a learning time. Then trying to understand what to buy, what to sell. Though if you're coming for what to buy, what to sell, then I'm not the right guy, right? So if you want to learn what is happening inside the markets, how the market is presenting the opportunity, always we can talk live. And yes, some of them, if I'm taking any positions during that time, I'll be informing you people, right? Yeah, thank you.
Okay, thank you. Good night, sir.